Sir, now Mr. Jagannath sir will join us. Sir, சாப்பிட்டாச்சு sir.
சாப்பிட்டமா வாய்ஸ் வருதா?
நல்லா
ஓகே ஓகே சார், ஸ்கிரீன் ஷேர் கொடுக்குறீங்களா?
nice. Sir, once I will give mute all. Sir, நீங்க unmute பண்ணிக்கோங்க sir.
Okay. I think all would have taken lunch in between, I think, isn't it? Mostly they would not have waited till the class is over. They are taking from the residents, no?
Yeah.
Or 43, consisting of around 41 or 43 questions, for which answers along with the PowerPoint presentation has been made in the CBOA website. Now the test paper number 3, we are going to that is cover the recovery policy of the bank, and then all other details with regard to income recognition, asset classification, provisioning norm, then matters related to that is SARFAESI, and then matters related to the appointment of recovery agents in the bank. And some other time, some other class, we will see that OTS policy of the bank. So this will take around 2 hours, that is 3 hours for me for discussing these points today. 100 questions are there. We will try to cover all the 100 questions. Now, the first point is, when the first question is, this is test paper number 3, sir, as far as you are concerned, recovery. When the overdue in a term loan account is more than 30 days and up to 60 days, it is classified as. Friends, you know, already you would have heard about that is special mention accounts. Okay, special mention accounts, as far as the RBI guideline is concerned, special mention accounts are classified into 3 categories: SMA 0, SMA 1, and SMA 2. SMA 0, when the overdue in the account is for 1 day and up to 30 days, it is SMA 0. SMA 1, 31 days to 60 days overdue, and SMA 2, 61 to 90 days overdue. Whereas this is applicable for term loan. In the case of ODOCC account, there is no concept called the SMA 0. So when that is, even though the liability is more than the limit, even though for 30 days, the account will not appear in SMA 0. Straight away on the 31st day, if liability continues to be more than the limit for 30 days, on the 31st day, the account will appear in SMA 1. So for ODOCC accounts, if liability is more than the limit continuously for more than 30 days, to be reported as SMA 1. SMA 0 is not applicable to ODOCC accounts. Okay, so then SMA accounts are exclusively for overdues only. As per the Reserve Bank of India guidelines, only if there is an overdue in the account, you have to classify either SMA 0, SMA 1 or SMA 2. There are certain non-financial delinquencies you will know. For example, stock statement not updated, a renewal not done, etc., etc. Then, for example, staff loans or VSLs, etc. These things with overdues or without overdues, you need not report it as SMA to Reserve Bank of India. For the internal purpose, you have separate classification for follow-up of the account. So the first question is, now you'll be able to answer. When the overdue in a term loan account is more than 30 days and up to 60 days, it is classified as SMA 1. So overdue in a term loan account, when it is more than 30 days, up to 60 days, it is classified as SMA 1. Question number 1, answer is B. Then the due date of a term loan installment on 31st March 2023. Before the day-end process of 31st March 2023, if the full dues are not recovered, from which date this account will be classified as SMA 0. Okay, so here, that is you should know. This point is here. Let's assume that is overdue. In an account, let us assume the installment is due on 31st March, or you take today. Today, we are on 5th November. Today, the amount has to be paid in the term loan account. The borrower has not paid the full amount due. Today, the amount is due. He has not paid the amount to today. So from which day the account will come under SMA 0. See, today day end, before end of day end today, if the borrower has not paid the full due today, from the end of today itself, the account will be called as SMA 0. See, if that is today is 5th November, let us assume 1,000 rupees is due in this account today. Before the end of today, the borrower has not paid the full 1,000 rupees. The SMA 0 for this account start from 5th November itself. It will not be from 6th November. From today itself, it will be called as SMA 0. So the 90 days or 91 days will start from today. See, let us see. Say the due date of a term loan installment is 31st March 2023. Before the day end process of 31st March 2023, the full dues are not recovered. From which date this account will be classified as SMA 0? From 31st March 2023. That is first day of overdue. SMA 0 starts from 31st March 2023. So question number 2, answer is A. Question number 3, when the above amount will not, when the above account will be classified as NPA if the overdues are not recovered. You see that. It is very simple calculation. See, the term loan, keep that in mind. There are two differences. The term loan will become NPA if the overdues are not recovered on the days till on the 91st day. So if the overdues are not recovered, a term loan will become NPA at the end of 91st day. On the other hand, an ODOCC account will slip to NPA if that is overdues are not recovered at the end of the 90th day. The difference between the two you should keep in mind. An ODOCC account will slip to NPA if the overdues are not recovered on the 90th day. At the end of the 90th day, the ODOCC account will slip to NPA. Coming to term loan, if the overdues are not recovered on the 91st day, at the end of the 91st day, the account will slip to NPA. Let us assume an account is started showing overdue on 31st March 2022. Okay, so on 31st March amount he has to pay, he has not paid. So SMA 0 starts on 31st March. So it will be in SMA 0, say 1 to 30 days overdue. So 1 to 30 days overdue, it will be in SMA 0. Okay, so first day overdue starts on 31st March. For 30 days, it will be in SMA 0. That is from 31st March to 29th April. You calculate from 31st March to 29th April, you will get 30 days. So SMA 0, this account will be on 31st March to 29th April because overdue started on 31st March itself. So from 31st March to 29th April, it is in SMA 0. Then when it will go to SMA 1, what is SMA 2? What is SMA 1? Overdues 31 days to 60 days. So it will go to SMA 1 on, that is 30th April. So from 30th April to 29th May, if you calculate 30 days, you will get. So it will be in SMA 1 from 30th April to 29th May. Then it will be in SMA 2, that is 61 days overdue, that is up to 90 days overdue. So that is, it will be in SMA 2 from 30th May to 28th June. I told you term loans will slip to NPA if the overdues are not recovered at the end of 91st day. So on 91st day, that is on June 29, the account will be classified as NPA. So SMA 0, that is SMA 0 will start from the first date of due. If it is not recovered, then you calculate 90 days. You find out which is the 91st day. From 31st March, which is the 91st day. The 91st day will be 29th June. The account will slip to NPA on 29th June. This is the logic for term loan. So let us see the question. Say, for example, if the account has overdues on 31st March, it is not recovered on 31st March. So it is SMA 0 on 31st March 2023. Question number 2, answer is A. Question number 3, when the above account will be classified as NPA if the overdues are not recovered. So 91st day, from 31st March, you start from 31st March, you calculate the 91st day. The 91st day will be 29th June 2023. Question number 3, answer is C. Okay, question number 3, answer is C. Question number 4, a OCC account will be classified as SMA 0 if outstanding balance remains continuously in excess of the sanctioned limit or drawing power, whichever is less, between 1 day to 30 days, between 31 days to 60 days, 61 days to 90 days. So that is an OCC account will be classified as SMA 0. Friends, you know, for ODOCC accounts, there is no concept called SMA 0. The answer should be another point, one D should be there, none of these. For ODOCC account, there is no, that is SMA 0, so none of these. So yes, for ODOCC account, 1 to 30 days overdue, it will not appear in SMA 0. From 31st day overdue onwards, it will start appearing in SMA 1. Okay. So for question number 4, answer is none of these. Question number 5. What is an out of order advance as per RBI notification dated 17th November 2021? I will show you the out of order advance. You will be able to answer. Say, when an asset will become NPA, interest and or installment of principal remain overdue for a period of more than 90 days in respect of a term loan. That is, if that is installment, either interest or principal has not been paid for more than 90 days. In a term loan, if the interest or installment is not paid for more than 90 days, at the end of the 91st day, the account will slip to NPA. That is the logic for term loan. Coming to ODOCC account. So when an ODOCC account will slip to NPA, the ODOCC account will be called as an out of order ODOCC account when it is an NPA account. All NPA accounts with regard to ODOCC is called an out of order account. So the concept of out of order is applicable only for ODOCC account. So when an ODOCC account is called out of order, if we say it is an out of order, that means it is an NPA account. So when we will say an ODOCC account as an out of order account, the account remains out of order in respect of an overdraft cash credit ODOCC or all out of order accounts are NPA. For example, you take this. A ODOCC account will be treated as out of order when if the outstanding balance remains continuously in excess of the sanctioned limit drawing power for 90 days. See, if the limit is more than the liability or drawing power, whichever is less, if the liability is more than the limit continuously for 90 days, at the end of the 90th day, the account will slip to NPA. So it is an out of order. Second possibility, liability is not more than the limit. Again, I repeat, liability is not more than the limit. Liability is not more than the limit, but still the account will become NPA when, see the second point, though the outstanding balance in the account is less than the sanction limit or drawing power. The first point is the outstanding balance in the account is continuously in excess of the sanctioned limit for 90 days. At the end of the 90th day, the account will slip to NPA. The second category, though the outstanding balance in the account is less than the sanctioned limit or drawing power. Though the outstanding balance in the account is less than the sanctioned limit or drawing power. So liability is not more than the limit. But still, what happens in the account? There are no credits continuously for 90 days. Not even a single rupee credit in the account, the dormancy. We call it as dormancy. So, even though the liability is not more than the limit for continuously for 90 days, in spite of that, the account will be called as NPA if there are no credits continuously in the account for 90 days. At the end of the day, 90th day, the account will slip to NPA. Another possibility. Another possibility, that is the liability is not more than the limit. Liability is within the limit only. In spite of that, there are credits. Still, there are credits in the account, but the credits are not sufficient to recover the interest debited during the quarter, previous 90 days. So, in all the three cases, an ODOCC account will be classified as an out-of-order account. It is an NPA account when the liability continuously more than the limit for 90 days. One point. Second point, liability is not more than the limit for 90 days, but there are no credits continuously for 90 days in the account. 90th day, the account will slip NPA. Then third point, liability is not more than the limit continuously for 90 days, but there are credits, but the credits are not sufficient to recover the interest debited during the previous 90 days. In that case also, the account will be classified as NPA and the account is called as an out-of-order ODOCC account. So let us see the question now. See, what is an out-of-order advances as per RBI notification dated 17 November 2021? The outstanding balance in the ODOCC account remains continuously in excess of the sanctioned limit drawing power for 90 days. That already all of us know. Point number 2, the outstanding balance in the ODOCC accounts is less than the sanctioned limit drawing power, but there are no credits continuously for 90 days. That is also an out-of-order out of order advance means NPA. Third point, the outstanding balance in the OD/OCC account is less than the sanctioned limit drawing power, but credits are not enough to cover the interest debited during the previous 90 days. So either if A happens, it is an NPA account, or if point number 2 happens, it is an NPA account, or point number 3 happens, it is an NPA account, or all the 3 points happens, or any 2 of the 3 points happens. In all the cases, it is an out of order account, it is an NPA account. So for question number 5, answer is E. For question number 5, answer is E. Next question we'll see. Question number 6. All SMA accounts are standard asset, NPA, substandard asset, doubtful asset. All SMA accounts are standard asset. Only after on the 90th day, they will go to NPA if it is OD/OCC, or on the 91st day, they will go to NPA if it is a term loan. So till that, SMA 0, SMA 1, SMA 2, they are all called standard asset only. Question number 6, answer is A. Question number 7. The cutoff limit of borrower accounts to be reported to Central Repository of Information on large credit. If they ask to expand the credit, Central Repository of Information on large credit. So what is the amount when the cutoff amount of a borrower exceeds certain level, that is you have to report to this particular public domain in RBI. So Central Repository of Information on large credit. So if the exposure to a party is 5 crores and above, if the exposure to a party is 5 crores and above, all banks have to report their exposure, whether it is a standard asset, whether it is SMA 0, SMA 1 or SMA 2, whether it is NPA. So the details about the exposures of 5 crores and above to be reported to Reserve Bank of India, clicked by all the banks. What is the periodicity? Monthly last day. On the monthly last day, they have to report. Besides the monthly report, there is a weekly report also. So monthly report, what they will report about the borrower, about the account, entire details to be given on the monthly basis. Then what they have to give on a weekly basis, every Saturday, they have to furnish certain information about these accounts, exposure of 5 crores and above to RBI credit. What is that? See, last week in this account, there would not have been any overdue. But in this week, some overdue would have started in this account. So last week, there was no overdue. This week, one day, at least 2 days overdue started. Those accounts to be reported to CRILIC on a weekly basis. There are some accounts till last week, there would have been overdue. But this week, the overdue would have cleared. So those accounts also to be reported to CRILIC on a weekly basis. So there are two types of reporting to CRILIC. Monthly basis, whether overdue is there, whether overdue is not there, etc., NPA, no NPA, the data to be furnished to CRILIC, exposure of 5 crores and above. Similarly, exposure of 5 crores and above, if there is the overdue has come, that any account till last week, there is no overdue. This week, overdue started, those accounts to be reported. And till last week, there would have been some overdues in some accounts. This week, the overdue would have come down. So it would have been removed, completely removed. Those accounts also to be reported on a weekly basis. So let us see the PowerPoint presentation. You will be able to answer the question. See, CRILIC, reporting to CRILIC. See, all accounts of borrowers with exposure of rupees 5 crores and above to be reported to Central Repository of Information on large credit. So monthly last day. Weekly report Friday. Every Friday, you have to upload a report to CRILIC. Again, exposure is 5 crores and above. But what you will show in that report? Defaulting borrowers and borrowers out of the default. From last Saturday to this Friday, as I told you, in an one account, that is, there was no, that is, all the overdues have been recovered. So that has to be uploaded to CRILIC. Whereas from last Saturday to this Friday, some new accounts have started showing overdue. Those also to be reported to CRILIC. So weekly, that is on Friday, it has to be uploaded. Monthly, on the last day, it has to be uploaded to CRILIC. Let's see the question now. So the cutoff limit of borrowing accounts to be reported to Central Repository of Information on large credit is rupees 5 crores and above. Question number 7, answer is A. Question number 8, what is the periodicity of submission of data to CRILIC? So monthly, weekly, bi-monthly. It is both monthly and weekly. So A and B. So for question number 8, answer is D. D. Monthly, what you have to report. Weekly, what you have to report. Monthly, last day. And weekly, every Friday, it has to be uploaded. So this is question number 8. Answer is D. Then, for the purpose of internal follow-up, SMAE includes accounts with exposure of. Let us see this. So there is always we get a confusion between that the SMA. Okay, so we have seen now SMA 0, SMA 1, SMA 2. When SMA 0, SMA 1, SMA 2 we have seen. Then for term loan we have seen. For ODOCC we have seen. Okay, sir. Now acrylic we have seen, no problem. Now, so for our internal follow-up, who has to follow up the SMA accounts in the bank? So like that, so based on for follow-up purposes, the SMA accounts of the bank is classified into SMA A, SMA B, SMA C, D, E, F. Sorry, and SMA NF, non-financial. That is your stock statement not due. That is your stock not submitted. Then renewal not done, etc. SMA non-financial, SMA agriculture, SMA staff, and SMA BSL. Like that, in our SMA statements is classified and we are getting the report. If the exposure to a party is less than 5 lakhs, if the exposure to a party is less than 5 lakhs, whether the party's account appear either in SMA 0 or SMA 1 or SMA 2. Again, I repeat, if the exposure to a party is less than 5 lakhs, whether the account appears in SMA 0, SMA 1 or SMA 2, it is called SMAA. So if the exposure is 5 lakhs and above and less than 25 lakhs, if any of the account of the party appears in SMA 0, SMA 1 or SMA 2, it is called the SMAB exposure. So if the exposure is 25 lakhs and above, less than 100 lakhs, it is called the SMAC. If the exposure is 100 lakhs and above, less than 500 lakhs, it is called the SMAD. So if it is 500 lakhs and above, it is called the SMAE. So friends, so don't confuse this with your SMA 0. SMA 0, that overdue norm is the same. Here what they did, for follow-up purposes, they brought the exposure criteria. In the exposure to a party in Canara Bank is less than 5 lakhs, and if any of his account appears in either in SMA 0 or SMA 1 or SMA 2, that account will be brought under SMA 1. One particular authority will be assigned for follow-up of SMAA accounts. So that is this clarification. Now let's see the question. For the purpose of question number 9. For the purpose of internal follow-up of SMAE includes accounts with exposure of rupees dash lakhs and above. So SMAE, you know, exposure of rupees that is 500 lakhs and above. It should be 500 lakhs and above. Yes, SMAE exposure of rupees 5 crores and above. That is 500 lakhs and above. Okay, so answer for question number is C. Question number 9. For the purpose of internal follow-up of SMAE includes accounts with exposure of rupees 500 lakhs and above. That is 5 crores and above. Question number 9. Answer is C. So don't confuse between SMA 0, SMA 1 and SMA 2 and SMA A, B, C, D. So this SMA A, B, C, D, etc. for our internal follow-up. Okay. If an account with exposure of rupees 25 crores and above appears in SMA 2 continuously in a quarter, a note to be placed to whom at the end of the quarter. Let us see this now. See, so I told you, no, say special mention accounts, follow-up of SMA accounts, RO branch head, all SMA accounts, whether SMA 0, SMA 1 or SMA 2 or SMA A to SMA E, all accounts to be followed by the branch head, RO head, SMA accounts of rupees 25 lakhs and above, exposure of 25 lakhs and above to be followed up by RO head, other RO executives, SMA accounts less than 25 lakhs coming in the RO, CBOA head, SMA accounts of 100 lakhs and above, CGM, GM credit wing HO, SMA accounts of 500 lakhs and above, that is 500 lakhs, you know, party E. Okay, HO camping, credit credit monitoring and administration wing will follow up SMA accounts of rupees 500 lakhs and above. Okay, this is for internal purpose. They may ask you a question. Last time they asked you a question. Recovery committee. Recovery committee, every month they have to meet and follow up with the accounts of exposure of so and so and so and above. So when the recovery comes, we will see. Similarly, if they ask you SMA accounts. So SMA accounts less than 25 lakhs exposure, who is the authority to follow up at the RO? So other than RO head. Or they may ask you that is SMA accounts of 100 lakhs and above exposure, who is the authority to, under whose authority it comes for follow-up, circle head, CO head. So like that, the questions may come. Now you see, here you see, quarterly note on SMA2 accounts appear throughout the quarter. For example, an account, let's assume, is appearing in SMA2 continuously in all the 3 months in a quarter. That means the party is paying only the critical amount. SMA2 means what? That is overdue is 61 days to 90 days. On the 90th day, it will slip to NPA. If it is term loan, it will slip to NPA on the 91st day. So this account continuously is appearing all the 3 months in SMA2. For those type of accounts, a note has to be placed to the appropriate authority depending upon the exposure of the party. So if they ask, you should not miss. So if the exposure is 25 crores and above, that is 2,500 lakhs and above. So if a note has to be placed to executive director overseeing stressed asset management wing. Why this account is appearing continuously in SMA2 in this quarter? It is a threat account. It may slip to NPA at any point of time. Similarly, if the exposure is 500 lakhs and above up to 25 crores, it should be placed to ED overseeing credit administration and monitoring wing. So if the exposure is 100 lakhs and above up to 500 lakhs, a note has to be placed to circle head. If the exposure is 10 lakhs and above below 100 lakhs, a note has to be placed to RO head. If they ask that question, you should not miss. If an account appears continuously in SMA2 and if the exposure is 10 lakhs and above and below 100 lakhs, a quarterly note to be placed to whom? The note has to be placed to RO head, analyzing why the account is appearing in SMA2 continuously in all the 3 months during the quarter. Okay, sir, this table you should be thorough. Any question they may ask you. Okay, now what is this question? If an account, question number 10. If an account with exposure of 25 crores and above appears in SMA2, continues to 25 crores and above, first one, appears in a quarterly note to be placed to whom? That is A, executive director overseeing stressed asset management wing, isn't it? Executive director. Yes, 25 crores and above, executive director overseeing stressed asset management wing. So for question number 10, answer is A. For question number 10, answer is A. Okay, question number 11. Substandard assets are classified into how many categories? Substandard assets. Now we saw from the beginning. So we saw what is SMA1, SMA0, SMA1 and SMA2. And then whether SMA0 is applicable for OD/OCC accounts, we told no. Then if the due is today, if the entire due is not recovered today, from which date the account will slip to SMA0, we told it is from today. Second one is, so if the overdue continues to be in the account, when the account will slip to NPA on the 91st day in respect of a term loan, on the 90th day in respect of an OD/OCC account. Then what we saw, what is an out of order OD/OCC account? Out of order OD/OCC account, we told it is nothing but the NPA. When an OD/OCC account will be classified as an out-of-order account, we already told you that is in 3 cases. Liability continues to be more than the limit on the 90 days, or liability is less than the limit, but there are no credits continuously for 90 days, or liability is less than the limit, there are credits, and the credits are not sufficient to recover the interest debited during the previous 90 days. In all the 3 cases, the account is called out of order. At the end of the 90th day, the account will slip to NPA. Then we saw about CRILIC, Central Repository of Information on Large Credit. Then we saw about for internal classification, how SMA accounts are classified in Canara Bank and who is the monitoring authority for these accounts. And then SMA2 continuously in a quarter appearing in SMA2 to whom the notes have to be placed. Okay, sir. Now you have done all the steps. So you are not able to, that is, recover the money. The account slips to NPA. Now, when the account slips to NPA, where it will go? Let's quickly go through. Okay, these things we already seen. Let's not worry too much about it. So very important topic slide we are coming now. For your what do you say, from our asset classification point of view concerned, the advances are classified into secured advance and unsecured advance. When an advance is called an secured advance, an advance is called an secured advance or secured asset is one where the value of the security is more than 10% of the loan amount at the time of sanctioning the loan. See, when you are sanctioning the loan, the value of the security is more than 10% of the loan amount. Don't be under the impression, only if the value of the security is more than 100% of the loan amount, it is called a secured asset. No. At the time of sanctioning the loan, if the value of the security is more than 10% of the loan amount, so it is called an secured advance. Why I am defining these two is when these advances slips to NPA, where they will go. Normally, an advance when it slips to NPA, it has to go to substandard. In certain cases, they will not go to substandard straight away. So first it has to go to substandard. Then from substandard, it has to go to DA. And from DA, it has to go to loss asset. That is the logic. But in some cases, they will not straight away go to substandard. They will straight away go to doubtful asset. Or some cases, they will straight away go to loss asset. In some cases, first year they will go to substandard. Second year they will not go to substandard. They will straight away go to, second year they will not go to doubtful asset. They will go straight away to the loss asset. We are going to see now. For that, you should understand the secured asset and unsecured asset. What is unsecured advance? At the time of sanctioning the loan, the value of the security is more than 10% of the loan amount. It is called an secured advance. Okay, what is an unsecured advance? At the time of sanctioning the loan, the value of the security is 10% or less than that of the loan amount at the time of sanctioning the loan. If it is more than 10%, secured advance. If it is 10% or less than 10%, it is an unsecured advance. Okay, sir. Now, let us see where these advances will go to when they slip to NPA. Suppose, so that is, before that, I want to ask you a question. Unsecured asset. The value of the security is 10% or less than that of the loan amount at the time of sanctioning the loan. You imagine a loan where the value of the security is 10% or less than 10% of the loan amount. For example, you take Canara budget or you take some of the personal loans where you have security. You do not have a security at all, 0% security. It is an unsecured advance. And for example, you take, let us assume a big new airport is going to come near Chennai International Airport. New airport is going to come. Let us assume that is airport authorities go for bid and somebody is successful in the bidding. People will take the project and new airport will be laid. For the construction of the new airport, you may require 20,000 or 30,000 or 50,000 crores. So let's assume the authority who has successful in the bid, they want to construct the airport and they want 50,000 or 30,000 crores loan. They may approach the bank. So either one or two banks or consortium banks will come together and they are ready to finance. So when they are ready to finance, what collateral they will ask from the airport people or the people who are going to construct it? Or you take 4-lane road laying. So when you take up the 4-lane road laying, so what security you will get? You will not get any security. Friends, for the infrastructure project, there will not be any security at all. Even though you are sanctioning crores of amount, there will not be any security at all for an infrastructure loan also. So what is an unsecured advance? At the time of sanctioning the loan, the value of the security is either 10% or less than 10%, including 0%, is called the unsecured advance. Not only Canara budget will be an unsecured advance, wherever the value of the security is 10% or less than 10% at the time of sanctioning the loan, it is called an unsecured advance. If the value of the security is 10% and above, it is called a secured advance. Now let us see. When an unsecured advance slips to NPA, so secured and unsecured visa, now I am taking up first unsecured, then I will go to secured. When an unsecured advance slips to NPA, where it has to go. When an unsecured advance slips to NPA, necessarily when it slips to NPA, on the date of slipping to NPA, it will be classified as unsecured substandard only. Again, I repeat, unsecured advance, when it slips to NPA, it will be classified as unsecured substandard only in the first year. For 12 months, the advance will be in the unsecured substandard. Then after 12 months, where it will go? Whether it will go to doubtful asset or it will go to loss asset. For example, what is an unsecured advance? At the time of sanctioning the loan, the value of the security is 10% or below 10%. It is called an unsecured advance. So first year, so it has to be classified as unsecured substandard only. For 12 months, it will be under unsecured substandard. Then at 13th month, where it will go? Depending upon the availability of security in the account. At the time of sanctioning, you had 10% or below 10%. No, depending upon the availability of security on the 13th month, it will go either to doubtful asset or it will go to loss asset. For example, Canara budget. When it slips to NPA, at the end of the first year, it will go to unsecured, sorry, when it slips to NPA, it will go to unsecured substandard. It will remain in this category for 12 months. On the 13th month, as I told you, there are no security for a personal loan, Canara budget loan. It will not go to doubtful one. On the 13th month, it will be classified as straight away loss asset. On the other hand, you take some unsecured advance. At the time of sanctioning a loan, there was some security, 10% or less than 10%. So those accounts, when it slips to NPA, if there are some security, so first year they will go to unsecured substandard. Next year, they will go to doubtful asset. So again, I repeat, unsecured substandard means at the time of sanctioning the loan, the value of the security is 10% or below 10% of the loan amount. When it slips to NPA, first year, all unsecured advances will go to unsecured substandard only. They will remain in this category for 12 months. Next year, whether it will go to DA1 or loss asset, that depends upon the availability of the security. If there is no security, it will straight away go to loss asset. It will not go to doubtful. Example, Canara budget, Canara pension, these types of clean personal advances. If there are some securities in those accounts, so those accounts will be classified as DA1. Okay, sir. Unsecured advance, when it slips to NPA, where it will go, I told you. Now, secured advance. Normally, what is a secured advance? You recollect. At the time of sanctioning the loan, the value of the security is more than 10% of the loan amount. At the time of sanctioning the loan, the value of the security is more than 10% of the loan amount. When that account slips to NPA, on the date of becoming NPA, let us assume the value of the security is less than 10% of the book liability. Please. So, on the time of sanctioning the loan, the value of the security is more than 10% of the loan amount, secured advance. When it slips to NPA, the value of the security is less than 10% of the book liability, NPA liability. When it slips to NPA, the value of the security is less than 10% of the book liability. That means there is erosion in the value of the security. When you gave the loan, it was more than 10%. When it slips to NPA, the security value is less than 10% of the book liability. So it is a secured advance. Why it is a secured advance? At the time of sanctioning the loan, the value of the security was more than 10%. So it is secured advance. When the secured advance slips to NPA, whether you have to classify as substandard or whether you have to classify as doubtful or whether you have to classify as loss asset, you have to see the value of the security. So when it slips to NPA, if the value of the security is less than 10% of the book liability, these advances will be straight away classified as loss asset. Okay, what about unsecured advance? When they slip to NPA, first year, you will classify them as unsecured substandard. But you see, in the case of secured advance, whether to classify as secured as that is substandard, or you have to classify as a doubtful asset or loss asset, that depends upon the availability of the security. So if the realizable value of the security is less than 10% of the book liability, when the account slips to NPA, straight away it will be classified as loss asset. It will not pass through substandard and doubtful asset category. Okay, that point you should keep in mind. Then, so that is when the value of the realizable value of the security is less than 10% of the book liability, it will be classified as straight away. A secured advance will be classified straight away as the loss asset. Then another possibility, the secured advance, when it slips to NPA, it will be classified as doubtful asset. Then it will be classified as doubtful asset. At the time of slipping to NPA, when the realizable value of the security is more than 10% but less than 50% of the value assessed by the bank in the last valuation, it will be straight away classified as doubtful asset. I'll give an example. See, example, last inspection, when the bank has done the last inspection, the security value, let us assume 100 lakhs. When it slips to NPA, the security value is more than 10 lakhs but less than 50 lakhs. So what is the previous slide I told you? At the time of slipping to NPA, when the realizable value of the security is more than 10% but less than 50% of the value assessed by the last inspection. Last inspection, what is the value of the security? 100 lakhs. When it slips to NPA, what is the value of the security? The value of the security comes down below 50% but above 10%. That is above 10 lakhs but less than 50 lakhs. Then this advance will be classified as doubtful one. Friends, again I am telling, secured advance classification as either straightaway, doubtful or loss, etc. It depends upon the availability of the security. If the value of the security is less than 10% of the book liability, straightaway loss asset. If the value is between 10 to that is 50%, you can classify it as doubtful asset. If the security value is more than 50%, you classify it as unsecured substandard. So, to classify unsecured advance as secured substandard, or you have to classify as a loss asset, or you have to classify as a doubtful asset, it is linked to the security value at the time of slipping to NPA. At the time of slipping to NPA, if the realizable value of the security is less than 10% of the book liability, it is called a loss asset. If the security value is more than 10% up to 50%, it is called a doubtful asset. If the security value is more than 50%, you call it as, what do you say? That is secured substandard. Okay. Now the next question is, you know what is now as a substandard asset. So what is substandard? Either unsecured advance will become substandard or secured advance will become substandard. When an unsecured advance becomes substandard, it is called unsecured substandard. When an unsecured substandard infrastructure, what is an infrastructure advance? I told you. So when an unsecured advance, which is given for infrastructure purpose, it becomes NPA, first year, it will be classified as unsecured substandard only. When an unsecured advance become NPA, it will be classified in the first year unsecured substandard. When an unsecured advance given to infrastructure slips to NPA, in the first year, it will be classified as unsecured substandard infrastructure. Why I am telling is, provision depends upon the category. Then third one, secured advance. When an secured advance will be classified as NPA, secured substandard, when it slips to NPA, the value of the security is more than 50%. So in that case, it is called the secured substandard. So a substandard asset is classified into three categories: unsecured substandard, unsecured substandard infrastructure, secured substandard. So once you classify an account as substandard, it will remain in this category for a period of 12 months. Okay, sir? Let's see the question. You'll be able to answer. Then we'll go to doubtful asset. See? Substandard, question number 11. Substandard assets are classified into how many categories? They are classified into three categories. Question number 11, answer is A. That is unsecured substandard, unsecured substandard infrastructure, then secured substandard. Okay, 3 categories. So question number 11, answer is A. Now let us go to the substandard. Now doubtful. So after 12 months, the advance will go to doubtful. So that is whether the going to doubtful, it depends upon availability of the security, which you already see. So first 12 months, the advance will be whenever it slips to NPA, we have to decide whether it will go to substandard or whether it will go to loss, etc., etc. So once you decide that this account has to go to substandard, it will remain in the substandard category for 12 months. Then next year, where the account has to go, whether it has to go to doubtful or loss asset, you have to decide depending upon the availability of the security. Once you classify as the account as a doubtful asset, it will go to a category called DA1. It will remain in this category for 12 months. After 12 months, it will go to a category called DA more than 1 up to 3. So doubtful assets are classified into 3 categories only. So we for our own internal use, we use DA4, DA5, etc. Don't confuse it with the RBI classification. Doubtful assets are classified into DA1, DA more than 1 up to 3, DA more than 3. Once you classify an account as doubtful asset, DA1, it will be in this category for 12 months. Then it will go to DA more than 1 up to 3. That is DA2 and DA3. So DA more than 1 up to 3 means what? DA2, DA3. DA2, it will be for 12 months. DA3, it will be for another 12 months. That means DA more than 1 up to 3, it will remain in this category for 24 months. If they ask that question, you should be able to write an asset. When it is classified as DA1 more than 1 up to 3, it will be remain in this cat. What is the how many months it will remain in? DA more than 1 up to 3. So it will remain there for 24 months. So DA1, it remained 12 months, and DA more than 1 up to 3, it remained for 24 months. Then where it will go? It will go to DA more than 3. So once it goes to DA more than 3, for how many months it will remain there? Once it goes to DA more than 3, it will remain in this category for an uncertain period. Either you recover the amount, full amount, or you write off from your books. So Reserve Bank of India says once an account becomes DA more than 3, it will remain in this category for an uncertain period. So in the exam last time they asked DA more than 3. It will remain in this category for how many months? It is not 12 months. Once it goes to DA more than 3, it will remain in this category for uncertain period. DA1 12 months, DA more than 1 up to 3 24 months, DA more than 3 uncertain period. Now let's see the question. A substandard account will remain in this category. Question number 12. So question number 11 we already seen. A substandard account will remain in this category for how many years? 12 months. It should be question number 12. Answer is A. 12 months. Substandard 12 months. Okay. Doubtful assets are classified into how many categories? Friends, please write the answer is 3. DA1, DA more than 1 up to 3, DA more than 3. Okay, don't write DA4, 5, etc. So doubtful assets are classified into how many categories? 3 categories. Question number 13, answer is A. Question number 14. A doubtful account more than 3 years. More than 3 years means DA more than 3. Will remain in this category for how many years? 12 months, 24 months, 36 months, uncertain period. Okay. Number 14, answer is D, uncertain period. Question number 15, which is not relevant with regard to provisioning for substandard. So what we saw now, account slip to NPA, what to be classified, whether substandard or doubtful or loss asset. If it is substandard, what category? Unsecured substandard infrastructure, secured substandard. If it is doubtful, DA1, DA more than 1 up to 3, DA more than 3. So we have seen. Now, what is the provision we have to keep once you classify the accounts in this category? That is the next stage in the NPA or SAP provisioning now. So we are going by step. Okay, now let us see. So substandard, what is the provision bank has to keep on the substandard asset? So substandard, what are they? Unsecured substandard infrastructure, then secured substandard. So what is unsecured, substandard, substandard, unsecured? So Canara budget. Okay, Canara budget, unsecured, substandard. So what is the provision you have to keep? 25% of the book liability, whether security is there or not to this account. Whenever an unsecured advance slips to NPA, it will go to unsecured substandard. Whenever an unsecured infrastructure loan slips to NPA, it will go to unsecured infrastructure substandard. Whenever a secured advance slips to NPA, so that is when you are going to classify, you will classify it as secured substandard. So when you are going to classify as an account as unsecured substandard, the provision you have to keep is 25% on the book liability, irrespective of the security. Whether security is there or not, you should not look into. So 25% of the book liability you have to keep as the provision. So substandard. So for unsecured infrastructure, if you are classifying the account as substandard unsecured infrastructure, then provision is 20% on the book liability. The third one, if it is substandard secured. So I told you three categories under the substandard. If it is substandard secured, it is sufficient if you keep 15% on the book liability. Sir, the thing is, for substandard asset, the security value should not be looked into at all. Irrespective of the security value, whether you have a security or not, substandard asset, you have to keep 25% provision or 20% provision or 15% provision on the book liability. Okay, next we will see. A doubtful. What is the provision you will keep for doubtful? So already all of you are aware, if it is DA1, deficient plus 25% of the secured portion. So 2, 3 max examples are there, arithmetic examples are there. At that time, you will get it clear. DA more than 1 up to 3 years, deficient plus 40% on the secured portion. DA more than 3, 100% on the book liability. So, DA more than 3, if government guarantee is available, to that extent, provision need not be kept. We will see it there. Loss asset and fraud accounts, 100% provision you have to keep. Now, let us see an example. Now, let's go back to the question. You'll be able to answer the questions now. See, question number 13 is over. Question number 14 is over. Question number 15. Which is, now you tell me the correct answer. Which is not relevant with regard to provision for substandard. Okay. Secured substandard, 15%. Unsecured substandard infrastructure, 20%. Unsecured substandard others, 25%. Okay. Unsecured substandard, 50, correct. Unsecured substandard infrastructure, 20, correct. Unsecured substandard others, 25, correct. Point number D. Provision for substandard will be calculated on book liability less realizable value of the security. That is wrong. See, the 20% or 15% or 25% will be calculated on the book liability. The security value will not be taken into account, which is not relevant. Question number 15, point number D is not relevant. Question number 15, answer is D. Question number 16. A term loan, this is some 4-5 examples are there. Please go through. If you are thorough with that, so you can answer any question, how the provisioning has been kept. A term loan has started showing overdue on 22nd February 2022. What do you mean by that? From 22nd February 2022, it will be classified as SMA 0. Okay, please, I repeat, a term loan account has started showing overdue on 22nd February 2022. That is SMA 0 day 1 on 22nd February 2022. The liability in the account is 10 lakhs and the security value is 7 lakhs. More than 50%. Security value is more than 50%. If the overdues are not recovered, what is the asset classification in this account as on 31st March 2023 and what will be the provision on March 31st, 2023? Please read the question. A term loan account has started showing overdue on February 22nd, 2022. That is SMA 0 on February 22nd, 2022. That is, if the overdues are not, the liability in the account is 10 lakhs and the security value is 7 lakhs. If the overdues are not recovered, what is asset classification for this account as on March 31st, 2023? Let us see the slide. You will be able to answer. See, first overdue in the account is on 22nd February 2022. So, SMA 0 starts on 22nd to 2022. So, it is a term loan. You calculate from 22nd February, what is the 91st day? You will get 23rd May. So, term loan will slip to NPA if the overdues are not recovered and are continuously for 90 days. At the 91st day, a term loan will slip to NPA. I already told you. So, first overdue on 22 to 2022, SMA 0. If the overdue not recovered, if you calculate the 91st day, it is on 23 May 2022. On 23/5/2022, the account will slip to NPA. So what category you have to classify, whether secured substandard, or you have to classify it as unsecured substandard, or you have to classify it as a doubtful, etc. You know the liability is 10 lakhs, the security value is 7 lakhs. So it is a secured substandard. More than 50% you are having the security value. So on the date of slipping to NPA, that is on 23/5/2022, it will be classified as secured substandard. You know, once an account classified as a substandard, it will remain in the category for 12 months. So 23/5/2022, it is a secured substandard. So it will go to doubtful only on 23/5/2023. That is, it will remain in the category for 12 months. Okay, what the question they have asked? What is the asset classification on this account for 31/3/2023? So on 23/5/2022, it is secured substandard. On 23/5/2023 only, it will become DA1. That means in between the period for 12 months, it will be in the secured substandard only. So on 31/3/2023, the account is classified as secured substandard. So now what is asset classification for 31st March? Secured substandard. Then what is the provision you have to keep for this account on 31st March 2023? You know, if it is a substandard secured, 15% on the book liability. So provision for secured substandard is 15% on the book liability, irrespective of the security value. So book liability is 10 lakhs. So 15% of the 10 lakhs is 1.50 lakhs. So what is the question now? The question is, a term loan account started. So what is the recover? Okay. So if the overdues are not recovered, what is the account classification on 31st March? And what will be the provision on this 31st March? So answer for the question is, so secured is substandard and the provision is 1.50 lakhs. For question number 16, answer is C. So you have to see when the account becoming overdue, and if the overdue continues, then it will become NPA. If it is ODOCC on the 90th day, if it is term loan on the 91st day, then if that on the time of slipping to NPA, what is this classification? Then on which date they are asking, on that date, what is this classification? So what for that classification, what is the provisioning? So for question number 16, answer is C. Question number 17. If an account became substandard on 30th March 2013 and the book liability is 10 lakhs and security value is 6 lakhs. Okay. So when it becomes NPA, straight away they are given. So on 30th March, it has become NPA. So what is the book liability? 10 lakhs. What is the security value? 6 lakhs, more than 50%. So on 30th March 2030, it is a secured substandard. So when it slips to NPA, on the day, what is the security value? What is the liability? More than 50%, you call it a secured substandard. Okay. What is asset classification for this account on 31st March 2018? On 31st March 2018, and the provision required for this account on 31st March 2018. Very simple. See, next question. See, the account slips to NPA on 30/3/2023. I have taken it as secured substandard on 30/3/2023 because book liability is 10 lakhs, security value is 6 lakhs. So it will remain in this category for how many months? 12 months. So on 33/24, it becomes DA1. So then it will remain in this category DA1 for 12 months. Afterwards, where it will go? It will go to DA more than 1 up to 3. That is for next to 24 months, it will DA more than 1 up to 3. That is from 2014 to 2015, it is DA2. From 2015 to 2016, it is DA3. Then what will happen? On 33/2017, it will go to DA more than 3. You know, once an account is classified as DA more than 3, it will remain in this category for an uncertain period. So on 33/2018, it is DA more than 3. On 31/3/2018 also, it is DA more than 3. What is the question? What is the question, sir? Let us see the question. So, what is asset classification for this account on 31st March 2018? The asset classification is DA more than 3. So, what is the provision you will keep for DA more than 3? You will keep a provision of 100% on the book liability, irrespective of the security value. That's what I have given here. DA more than 3 will remain in this category for an uncertain period. So for 31/3/2018, the account is DA more than 3. The provision for DA more than 3 is 100% on the book liability, irrespective of the value of the security. The security is 6 lakhs. Don't take into account 10 lakhs is the liability. You keep 10 lakhs as the provision. So, if the account is DA more than 3, irrespective of the value of the security, you have to keep provision. So, answer for the question is DA more than 3, provision is 10 lakhs. So, what is the answer, sir? Question number 17, DA more than 3. So, question number 17, answer is C. Again, question number 17, answer is C. Question number 18. The book liability of NPA account is 6 lakhs. So, question number 18, we are seeing, sir. The book liability of an NPA account is 6 lakhs. The collateral value is rupees 3 lakhs and the prime security value is rupees 2 lakhs. Guarantor's net worth is 10 lakhs. What provision you will keep for this doubtful account of more than 1 year up to 3 years? So they already told what is asset classification. DA more than 1 up to 3 as on 31st March 2021. So as on 31st March, so the account is classified as DA more than 1 up to 3. So what is the liability? 6 lakhs. What is the security available? Collateral 3 lakhs, prime security 2 lakhs, guarantor's net worth. So for calculation of provision purpose, please do not take into account the guarantor's net worth. Now let us see. So let us see the example. DA more than 1 up to 3. On which date? So on the date of NPA, this is DA more than 1 up to 3. What is the provisioning? So DA more than 1, 3, deficient plus 40% on the security. So book liability is 6 lakhs, prime security is 2 lakhs, collateral security is 3 lakhs. So total security value 2 plus 3, 5. You should not take into account the guarantor's net worth. So what is deficient? Deficient is nothing but liability minus the security value. Here you have two securities. Both the securities you have to take into account. So the unsecured portion is the deficient. 6 lakhs is the liability. 5 lakhs is the security value. So 1 lakh is the deficient. Okay, you calculated the deficient. So provisioning for DA more than 1 up to 3, deficient plus 40% on the security. Now, what is the security value? 2 plus 3. 5 is the security value. So deficient is 1, already you worked out. So security already you know. 40% on the security comes how much? 2 lakhs. So deficient 1 lakh plus 40% on the security comes to 2 lakhs. So the total provision for the account is 1 plus 2, 3 lakhs. Guarantor's net worth should not be taken into account. That is question number 18. So what is the provision for this account? Answer should be B. Question number 18, answer is B. So 3 lakhs, isn't it? 3 lakhs only we got. Answer is, provision is 3 lakhs. Question number 18, answer is 3 lakhs. That is, answer is C. Okay, sir. Now let's go to question number 19. A Canara budget loan became NPA on 30th November 2020. It is an unsecured advance. What I told you, when an unsecured advance slips to NPA, on the date of NPA, it will be classified as unsecured substandard. So it will remain there for 12 months. Then on the 13th month, where it will go. Whether any security is there, there is no security. For Canara budget, there is no security. So after 12 months is over, this loan will straight away go to loss asset. Okay, that you keep in mind. A Canara budget loan became NPA on 30th November 2020. What is the asset classification for this loan on 30th November 2021? 12 months it will be in unsecured substandard. So on 30th November 2021, it is called a loss asset. Question number 19, answer is straight away loss asset you can take. Okay, answer is C. That's what I have given the example also. Canara budget. When an unsecured advance slips to NPA, in the first year, it will be unsecured substandard. In the second year, it will be DA1 or loss, depending upon the availability of the security. For Canara budget loan, there is no security. So in the second year, it will be classified as loss asset. So 30/11/2020 substandard unsecured. So 30/11/2021 loss asset. Okay, sir, answer is loss asset. Okay, that you already seen. Question number 20. An NPA account with balance of rupees 10 lakhs. Value of the security is 1.50 lakhs. The account is more than 3 years DA. DA more than 3. Very simple, straight question. So, liability is 10 lakhs. Security value is 1.50 lakhs. What is its asset classification? DA more than 3. When an account is DA more than 3, what provision you will keep for this account? You will keep 100% on the book liability, irrespective of the value of the security. So, book liability is 10 lakhs. Security value should not take into account. So, the provision for this account is 10 lakhs. Question number 20, answer is B. Okay, question number 21. See, the same question number 21 you see. That is a government guarantee in question number 21. If there is a government guarantee, how to calculate the provision? In the first question, that is in the question number, that is 20, there is no government guarantee. Okay, question number 21 you see. An NPA account with balance of rupees 10 lakhs secured by CGF guarantee cover of 75%. Value of the security is 1.50 lakhs. Account is more than 3 years DA. Provision for this account. See, in the previous case also, book liability is 10 lakhs. Security value is 1.50 lakhs. And what provision you will keep? Because straight away told 10 lakhs. Because DA more than 3, irrespective of the value of the security, you have to keep 100% provision on the book liability. You take this case. Here, same 10 lakhs, same value of the security is 1.50, but the guarantee cover is 75%. If there is a guarantee cover available to the loan, to the extent of the guarantee cover, we need not keep provision. Again, I repeat. So, whenever there is a guarantee cover, to the extent of guarantee cover, we need not keep provision if it is either DA1, DA more than 1 up to 3, or DA more than 3. But if it is a substandard asset, whether government guarantee is there or not, you have to keep 100% provision on the book liability. Sorry, 25%, 20%, 15%. Again, I repeat, sir. So whenever there is a CGTMSC guarantee or ECGC guarantee, etc., is available, and if the account is a doubtful account, then you can take into account the guarantee cover available. To that extent, you need not keep provision. But if it is a substandard asset, even if the guarantee cover is available, you should not take into the account the guarantee cover. You have to keep provision only on the book liability. The difference you should know. Now let us see. Question number 21, how it is worked out. We'll see the presentation. See. Same. Book liability is 10 lakhs. So security value is 1.50. So it is DA more than 3. I told you, if it is DA more than 3, normally, whenever there is a security, we will not take into account the security value. Straight away on the book liability, we will keep 100% provision. But now, if it is a government guarantee is there, to that extent, we need not keep provision. Now, what is the government guarantee available? 75%. Now, one more point you should know, the guarantee CGTMSE will not give 75% on the book liability if there is any securities available. Here, the book liability is 10 lakhs. Security value is 1.50 lakhs. So what is the other portion? 8.50 without security. So the 75% you have to calculate on 8.50, you should not calculate on 10 lakhs. So generally, when we say there is a security is available, straight away we will take the liability with the percentage of the guarantee available. But if there is a security available to the account, the credit guarantee company will give 75% less than the security. So book liability is 10 lakhs, security value is 1.50. So the balance in the account is 8.50. See, this balance is covered by the ECGC guarantee of 75%. 75% of 8.50 is 6.375. You see, book liability is 10 lakhs and you have a guarantee of 6.375. So you should not say, so 75% on 10 and you should not say guarantee is 7.50. You should say guarantee is on 75% of the unsecured portion only. 10 minus 1.50 on 8.50. So the guarantee available 75% on the 8.50, which is 6.375. So to the extent of, so normally DA more than 300% on the book liability. Since there is a government guarantee is available to the extent of 6375, so even though the book liability is 10 lakhs, you need not keep secure provision on this 10 lakhs. 10 minus 6.375, you find out. So the balance on 3.625 only, if we keep provisioning, that is sufficient. So this reducing the government guarantee and keeping the balance only on security, keeping the balance only provision is applicable only for the doubtful assets category. So this is DA more than 3. You have to keep 100% provision on the book liability. Since there is a guarantee, what extent guarantee is available? If any security available, you have to remove from the liability. On that, you have to calculate that is a guarantee availability. So to that extent of guarantee availability, bank need not keep the provision. 10 minus 6.325, you have to keep 3.625. If there is no guarantee for the entire 10 lakhs, you have to keep provision. Okay, sir. Good. Answer for question number 21 is D. Question number 22. A pre-shipment export credit, DA more than 1 up to 3. What is the provision for DA more than 1 up to 3? Deficient plus 40% on the security. Okay, sir? Deficient plus 40% on the security. That you keep in mind. Now, this account is having a guarantee also. It is having some security. It is having some guarantee also. Now, how to calculate the deficit? How to calculate the provision? When there is a government guarantee is also in that account. DA more than 1 up to 3, debit balance of 4 lakhs. The security value is 1.50 lakhs and ECGC cover available is 50%. What provision is required for this account? So that is, let us go and see the answer. Question number 22, how it is worked out, we will see. Sir, book liability is 4 lakhs. Security value is 1.50 lakhs. You remove the security value, the balance available is 2.50. So ECGC cover is available 50%. It means ECGC is to be calculated after deduction of the security value from the liability and not on the liability. So ECGC cover is available 50% on the 2.50, that is 1.25 lakhs. So now in this example, so there is a security value and there is another security which is the ECGC guarantee. So what is the total value of the security now here? One security is there 1.50. Then you found out what is the ECGC guaranteed portion. That is also a security. So that is also 1.25. So the total security value, for the total security value, you have to take the existing security value plus the ECGC guaranteed portion. So the total security value is 2.75. What is provision for DA more than 1 up to 3? Deficient plus 40% on the security. So what is deficient now? So 4 lakhs is the book liability minus the total security value, including the ECGC guarantee. 4 minus 2.75, that is 1.25 is the deficient. So now you got the deficient. Now you have to calculate 40% on the secured value. Now, whether 40% you have to calculate on, because we have taken this as security value, no, whether the 40% provision, whether we have to take on the 2.75 or the 40% we have to exclude the ECGC portion and take only on that 1.50. See, DA more than 1, deficient 40% on the security. Friends, so that is provision need not be kept on ECGC portion. So to find out the provision, please don't take the entire security value as security and find out 40% on the 2.75. You take only, you exclude the ECGCC covered portion. The security value is 1.5. For provision purpose, you have to take into account only the security value. For calculation of deficit, you have to take into account the security value plus the ECGC guarantee portion. So deficit is 40% on this 1.50 and not on 2.75. So because you are having a ECGC guarantee, you get two benefits. For deficit purpose, you are including the guarantee and reducing the further the amount. Whereas for provision purpose, you are excluding that and calculating provision only the available security. So 40% on the 1.50 is 2 points, so not on 2.75. So provision is deficient. Deficient you already calculated 1.25 plus 40% on the 1.50, that is 0.60. So 1.25 plus 1.60 is equal to 1.85. Okay. So answer for question number 22, answer is 1.85 lakhs. That is question number 22. Question number 23. Let us see. So that is also one more. And then afterwards with this provisioning will be over. We'll be going out to some more topic. Account DA1. Account DA1. So DA1, what is the, immediately you should stuck your mind. DA1 means provision is deficient plus 25% on the security portion. Okay, the account DA1, liability is 10 lakhs, prime security is 2 lakhs, collateral is 3 lakhs, guarantor's net worth is 20 lakhs. Guarantor's net worth you should not take into account. So what we are having? Prime security we are having 2 lakhs. Then collateral security we are having 3 lakhs. Then CGTMSE cover is also there 50%. What is the provision required for this account? Very simple. See question number 23. Liability 10 lakhs. Security is 5 lakhs. That is guarantor's net worth should not be taken. Prime security and collateral security. So 5 lakhs. So unsecured portion is 5 lakhs. So CGTMSE cover is available 50%. 50% on this 5 lakhs, which comes to 50% of 5 lakhs, which comes to 2.5. Now, what is the total value of the security to find out the deficit? So that is prime security, collateral security plus CGTMSE security. So that's what I again next slide. The total security value will be 5 plus 2.50. What is this 5? Prime security, collateral security. What is this 2.5? CGTMSE guarantee. All the three will come together. 7.50 is the security value. What is the deficit? So deficit is book liability minus security value 2.5. Now it is DA1. DA1 provision is deficit plus 25% on the security. 25% whether you have to take on the 7.50 or on this 5. So you should not calculate the provision. You should not take this CGTMSE covered portion. So 25% should be taken only on this 5 lakhs. So already deficit you know. So 25% on the 5 lakhs comes to, so deficit is provision is 2.50. How it is worked out? 1.25 is the that is deficit. So deficit is 2.50. Deficit is 2.50 plus 1.25 is the CGTMSE guarantee. 25% on security, 25% on the 5 lakhs comes to 1.25. So total provision required for this account is 3.75 lakhs. So 3.75 lakhs. So answer for question number 23, 3.75 lakhs. So these type of examples, these type of calculations is available in your circulars issued by bank for the financial year. Every year for the financial year end, a circular will come for the balance sheet purpose, March balance sheet. In these calculations are there. How to do the calculation? Okay, sir. Question number 23 is over. Now, question number 24. In an OCC account, if the stock statement is not submitted for more than 3 months from the due date, and hence the drawing power calculated for the stock statement is older than 3 months, it is called irregular ODOCC account. Friends, you know, if the liability continues to be more than the limit for 90 days, at the end of the 90th day, the account will slip to NPA. If there are no credits continuously for 90 days, at the end of the 90th day, the ODOCC account will slip to NPA. There are credits and the credits are not sufficient to recover the interest debited in the previous day, 90 days, the account will slip to NPA out of order. Now, when an ODOCC account will slip to NPA, if stock statement is not submitted, if the stock statement is not submitted for 6 months only, the account will slip to NPA. So first 3 months, if the stock statement is not submitted, it is called irregular ODOCC account. If this irregularity continues for another 3 months, at the end of the next 3 months, that is totally from 180 days, the account will slip to NPA. Okay, and ODOCC account, if stock statement is not submitted for more than 3 months from the due date, and hence the drawing power calculated from the stock statement is older than 3 months, it is called irregular ODOCC account. Question number 24, answer is A. In an ODOCC account, the DP was arrived based on the stock statement of 31st March 2019. If further stock statements are not submitted for how many months, the account will become NPA for next 6 months. Question number 25, answer is B. Question number 25, answer is B. Question number 26. In a CC account, the limit expired on 1st November. If the limit is not renewed for how many days, the account will slip to NPA. If the limit is not renewed either for next after 6 months or 180 days, the account will slip to NPA. They ask number of days, 180 days. You can give answer for question number 26, 180 days. Question number 27. Substandard, doubtful, and loss assets are called, what are they called? So they are not called as SMA, they are not called as SWL, they are not called red flagged accounts, that is none of these. Question number 27, answer is none of these. The correct answer is they are called NPA, non-performing asset. What is the accelerated provision for DA1? Very important. Now we saw provisioning, isn't it? Substandard, what is the provisioning? And doubtful, what is the provisioning? Then for loss and fraud accounts, what is the provisioning we saw? Now, what is the concept of accelerated provision? So that we will see now. See, you have to classify an account, that is particularly when there are overdues or not there for 12 months, that is immediately on the 91st day or on the 90th day, you have to classify the account as NPA. Okay, 90th day or 91st day. If you are not classified, if your account should have been classified as substandard, you are not classified as substandard. An account should have been classified as doubtful. Instead of classifying as doubtful, you are keeping it as substandard. An account should have been classified as DA more than 3. Instead of that, you are keeping DA1. In those cases, if Reserve Bank of India finds out, it will ask you to keep more, that is more provision, because you have not correctly showed the account as NPA to Reserve Bank of India. So that is a penalty RBI will impose on the banks. What that is called accelerated provision. Let us see. So normally, the normal provision for unsecured substandard is 15%. The normal provision for substandard unsecured other than infrastructure, 25%. The substandard asset unsecured infrastructure, the normal provision, it is 20%. So if it is not shown on the due dates correctly as per the particular classification, what is the accelerated provision the RBI will ask us to keep? So up to 6 months, if you are not classified an account as a secured substandard, if you are not shown as a secured substandard, no problem. The same provision only you have to keep, no problem. Suppose even beyond 6 months, if you are not classified as an account as an unsecured substandard, continue to show it only as a standard asset, Normally, had you classified as a secured substandard, you should have kept 15% provision, isn't it? But you have not shown it as secured substandard even after 6 months. You should have been done 6 months back, but RBI kept quiet. So for 6 months, after 6 months also, you are not classified as an unsecured substandard. Had you classified as unsecured substandard, you should have kept it only 15% provisioning. But since you are not classified as secured substandard, even after 6 months, then you have to keep an accelerated provision of 25%. The more provision you have to keep as against your eligible entitlement. You see here, unsecured other than infrastructure. Normally, you have to keep 25%. Then what you have done for up to 6 months, no problem. Above 6 months, up to 1 year, so you have to keep, you are not shown it. Had you shown, you have to keep only 25%. Now you have to keep 40% penalty, additional provision you have to keep. Secured substandard, substandard asset, unsecured infrastructure. Normally it is 20%. Within 6 months, if you are not showing, you have to keep accelerated provision of 25% against the normal provision of 20%. 6 months to 1 year, you have to keep your accelerated provision of 40% against the norm of 20%. Similarly, doubtful DA1, normal provision is DA1 plus 25%. So whether not the question of here within 6 months or more than 6 months. If you are not classified the account as DA1 as from the date in which you have to classify, if it is found out, you have to keep an accelerated provision of deficient plus 40% on the secured portion. So normally it is a DA more than 1 up to 3, 40% deficient plus 40%, you have to keep 100% provision. For DA more than 3, already 100%, here also 100%. So friends, this is accelerated provision. Let us see the question. What is the accelerated provision? Accelerated provision for DA1. So provision is, normal provision is this much. Accelerated is deficient plus 40% on the secured portion. Answer for the question is deficient plus 40% on the secured portion. Deficient plus 40% on the secured portion. Question number 29. Under OTS, the compromise amount is calculated after taking into what cost? See, bank is going for OTS. Let us assume a borrower has to pay 2 crores. We are taking 1.50 crores from him and 50 lakhs we are writing off and we are allowing him to go back. Okay, that 50 lakhs is the cost to the bank, isn't it? That is the 50 lakhs is the cost because of OTS. On the other hand, so 1.5 crores you got, 50 lakhs you are written off. So on the other hand, if the entire 2 crores you have kept in your books, so if the entire 2 crores you have kept in the book, no OTS. So for the entire 2 crores, you have to keep various provision. Not only that, for the entire 2 crores, lot of returns, lot of follow-up cost, etc., etc. So the bank will find out by keeping the entire NPA in the book, what is its cost. On the other hand, if the bank recovers a portion, what is the benefit? Please understand, if we keep the entire liability in the book, what is the cost to the bank? If the bank recovers a portion and writes off a small amount, what is the benefit for the bank? The difference between the benefit and the cost is called opportunity cost in economics. So the opportunity cost is applied for determining the OTS amount. So answer for the question is, under OTS, the compromise amount is calculated after taking into the opportunity cost. Question number 29, answer is D. Okay, question number 30. In the case of advances given to short duration crops, and if the interest installment remains overdue for 2 crop seasons, the account classified is NPA. Short duration crop means harvest is within 12 months. Question number 30, answer is A. The harvest is within 12 months from the date of that is sowing, so it is called a short duration crop. Question number 30, answer is A. Question number 31. Though the liability continues to be more than the limit sanctioned, even beyond, so long as there is no erosion in the margin, loans sanctioned against which of the following security need not be classified as NPA in the normal course. Friends, You know, in the case of ODOCC, if the liability continues to be more than the limit for 90 days, at the end of the 90th day, the account slips to NPA. Okay, and whereas when you give the loan when you are giving a BSL against an NSC, or when you are giving an OD against NSC, okay, let us assume the normal margin is 10%. 100 lakhs is that is deposit. So 90 lakhs the borrower can take the loan. So the margin is 10%. Let's assume the borrower says, give me only 50 lakhs loan. So you are given 50 lakhs loan. Up to 90 lakhs, the borrower can take the loan because the margin is 10%. But you fixed at 50 lakhs only. So let us assume for 3 months, the borrower has not serviced the interest. So 50 lakhs has become 52 lakhs or 53 lakhs at the end of the third month, let us assume. Liability is more than the limit. So even though in these cases, the liability is more than the limit continuously for 90 days, at the end of the 90th day, these accounts will not slip to NPA because they are not eroded the margin. Only when the liability crosses the 90 lakhs, they will be going to NPA accounts. So all of these. Question number 31, answer is F. Question number 32. In central government guaranteed account, principal and interest become overdue for more than 90 days. But central government not yet repudiates the guarantee. This account has to be classified as NPA and all IRAC norms are applicable. Need not be classified as NPA, but income from this account should not be recognized. It should be treated as a performing asset. None of these. Friends, central government guaranteed accounts. As long as the central, let's assume 90 days is over, principal and installment not recovered, 90 days is over, 91st day, whether the account to be classified as NPA, provision to be kept, and interest will not be recognized. That is a question now. In the case of central government guaranteed accounts, if interest and installment is not paid for more than 90 days, and if central government not yet repudiated the claim, that is, central government says, I will not give the claim. Central government has not told. So, for more than 90 days, no interest and installments not paid, but central government has not yet repudiated the claim. At the end of the 91st day, if it is a term loan, these accounts need not be classified as NPA, provision need not be kept. But on the other hand, after the 91st day, income from these accounts should not be recognized for IRACP norm. There are two things, no? IRACP, income recognition, asset classification. So as long as the central government has not repudiated the claim, even though the installment are more than 91 days, these accounts need not be classified as NPA and provision need not be kept. But on the other hand, the income from these accounts should not be recognized for income purposes. So what is the question? For question number 32, answer is B. Need not be classified as NPA, but income from this account should not be recognized. This is for 32. Last time, they are state government guaranteed accounts. For state government guaranteed accounts, it is like any other account. If interest and installment is not due or not recovered for more than 91 days, whether state government repudiates or not repudiates the claim, these accounts to be classified as NPA, the provision to be kept, and income should not be recognized. So the special permission is available only for central government guaranteed accounts. Question number 33. Under consortium, banks classify the advance as per IRAC norms based on lead bank's classification of the bank which has the highest share, record of recovery in respect of banks, none of these. See, you are having a consortium account, let us assume. You are a member, some others are member, 4-5 banks are there. In every bank, recovery is coming. Let us assume in your bank, that is the overdues are 91 days is over. In some other banks, the overdues are 30 days. In some other bank, there are no overdues. Since it is overdue for more than 91 days in your bank, against the same property, the loan is given, whether the loan to be classified as NPA in all the member banks or it will be classified as NPA only in your bank. Yes, it will be classified as NPA only in your bank. So classification of accounts as NPA or not NPA, SMA 0, it depends upon the record of recovery in each bank. So it depends upon how the recovery in each bank based on the record of recovery. Answer is there? Yes. Question number 33. Answer is record of recovery in respective banks. Okay, sir. Quick. Now, guidelines on publishing the photographs of borrowers. See, when the NPA borrowers are not repaying the loan, so bank wants to publish the photograph of the NPA borrowers. Whose photograph, as per Reserve Bank of India, bank can publish in the newspaper. So that is as per Reserve Bank of India guideline, before publishing a borrower's photograph in the NPA borrowers in the newspaper, that borrower should have been classified as a willful defaulter, or he should have been classified as a non-cooperative borrower. Who is a willful defaulter? You know who is a willful defaulter, having all the sources to repay, but he has not repaid it. So if the liability of those accounts is 25 lakhs and above, they have to be reported to Reserve Bank of India, credit information companies, etc. So willful defaulters means don't be under the impression the liability is 25 lakhs and above. Even 1 lakh liability you can classify as willful defaulter. Then what is the 25 lakhs and above? As for CBC guidelines, if the liability is 25 lakhs and above, and if he is classified as a willful defaulter, the names of such borrowers to be reported to Reserve Bank of India, to be reported to CBIL, etc. Even less than 25 lakhs, a bank can classify a borrower as a willful defaulter. That point you keep in mind. Then who is a non-cooperative borrower? The same type of fellow. He is having all the sources. He is not allowing you to do stock inspection. He is threatening you, etc., etc. He is getting all income. If the exposure of such fellows are more than 5 crores, instead of calling them as willful defaulters, we call them as non-cooperative borrowers. Okay, if they ask the question, last time they asked non-cooperative borrowers, the exposure is 50 million and above, that is 5 crores and above. Sir, question examiner asked the question in million also, because Reserve Bank circular and in your circular also the word million is appearing. The exposure to a party, that the NPA party is 5 crores and above, 50 million and above, and if he comes under the willful category, you will call him as a non-cooperative borrower. Okay, sir. Who is a willful defaulter? Irrespective of the liability, a person can be classified as a willful defaulter. If the liability is 25 lakhs and above, to be reported to CRILIX or to be reported to CIC, to be reported to Reserve Bank of India. If the exposure is 5 crores and above, we call him as a non-cooperative borrower. Now the question is, whose photograph you can publish in the newspaper? As per Reserve Bank of India guideline, all willful defaulters' photographs can be published by the bank in the newspaper. So who has to decide whether the borrower is a willful defaulter or not? The respective bank will decide the borrower is a willful defaulter or not. At head office level, a committee will be there. The branches and the circles to recommend to the committee, we want this borrower to be classified as a willful defaulter. The liability may be any amount. Then bank will give an opportunity to the borrower, ask him to come and present to the bank why he should not be called as a willful defaulter. Within 30 days, the person will come and present to the bank. He should be called why he should not be called as a willful defaulter. The bank has to satisfy his reply, or the bank will not be satisfied. So the committee will decide, yes, he will be called as a willful defaulter. Once the committee decides a person to be called as a willful defaulter, then his photograph only to be published in the newspaper. Now, in our bank, so Reserve Bank of India guideline is with regard to willful defaulter, I told you, non-cooperative borrower, I told you, how to classify a borrower, who will give him as a willful defaulter chopper, I told you. Now, in our bank, what is the guideline with regard to publishing the photograph of a willful defaulter? So, if the liability is 10 lakhs and above, in our bank, we can publish the photograph of a willful defaulter only if the liability is 10 lakhs and above. DGM of the circle should give permission for that. Third point, we have to send a notice to him, wait for 30 days. That is informing him the intimation, that is intention of the bank to publish his photograph in the newspaper. So this is the Willful defaulter, I told you. Non-cooperative borrower, I told you. When to report to CRELIC CAC, I told you. As per RBI guidelines, irrespective of the liability, willful defaulters' photograph can be published. In our bank, we have taken a decision 10 lakhs and above, circle DGM has to give the permission. Let's see the question. Banks can publish only the photographs of all defaulting borrowers with the permission of the board, all borrowers, all willful defaulters. Question number 34, answer is D. Question number 35. To publish the photograph of a willful defaulter in our bank, the liability should be rupees 10 lakhs and above. Then how much time to be given to the willful defaulters to clear the dues, as otherwise bank will indicate its intention of publishing his photograph in the newspaper. So question number 35, 30 days. Is there, sir? Yes. Question number 36, answer is B. Question number 36, answer is B, 30 days. Okay, sir. See, before going to the policy on the recovery agents, we will quickly go through the SARFAESI action. Okay, SARFAESI and the guidelines related to SARFAESI. Then we will come to the recovery agents, because SARFAESI is very important. Recovery agents also the SARFAESI. Now, so that is, we will go to the SARFAESI presentation. Few slides I will run and I explain to you. Okay, it has come. Now, you know the expansion of SARFAESI, securitization and reconstruction of financial assets, and Enforcement Security Interest Act 2002. What gives power? So, under the SARFAESI action, bank is called the secured creditor. The borrower is called secured debtor. Okay, bank is called the secured creditor. Borrower is called the debtor. Okay, we are the secured creditor. So, SARFAESI Act empowers the banks to enforce the securities and realize their dues without the intervention of the court. So, SARFAESI action. So, SARFAESI Act empowers the secured creditor to enforce the securities and realize their dues without the intervention of the court. My question here is to you, whether that is AOD should be available before proceeding under SARFAESI. Whether AOD should be available before proceeding under SARFAESI as per the SARFAESI Act. No, there is no need for law of limitation. But the problem will be for us, if the AOD is not there, after initiating the SARFAESI action, if the amount is not coming or there is a shortfall in the sales, balance amount, how will you recover? Isn't it? So SARFAESI action does not say that is you should necessarily have an AOD, or the law of limitation should not have an expired for enforcing the security under the SARFAESI. But as a banker, we should know, once you issue the SARFAESI action, borrower will not cooperate to sign the AOD. So the AOD should be enforced as per to protect ourselves. But as per the law, it is not required, because it is to enforce the securities without the intervention of the court. Okay, sir. Then, which are all the accounts not eligible under SARFAESI? From that, 1 or 2 points they are asking in the exam. The liability in the account is less than 1 lakh. If the liability in the account is less than 1 lakh, that is 1 lakh and above only. If the liability is 1 lakh and above only, it is eligible under SARFAESI. If the liability is less than 1 lakh, the account is not eligible under SARFAESI. 1 point, you have to note it down. Second point, even though the liability is 1 lakh and above, if the borrower has already paid 80% of the amount due to the bank, so already you have taken a loan, along with interest, this much amount he has to pay. He has already paid as on date 80% of the amount due to the bank. So the account slipped to NPA. Okay, already he has paid 80% of the out of his liability. Still the liability is there. The liability is 1 lakh and above. In that case also, you cannot proceed under SARFAESI. Amount due to the bank is less than 20% of the principal and interest, though the liability is 1 lakh and above. And normally, if the security interest is created in agricultural land, except where securities are eligible for SARFAESI action, like coffee, tea plantation, poultry, etc., farmhouse, where a structure is also there in the agricultural land. Normally, vacant agricultural lands for farming purpose, etc., taken as collateral, cannot be brought under SARFAESI. Certain exceptions are there, like, farmhouse, tea plantation, coffee plantation, poultry, etc. can be brought under SARFAESI. So if the SARFAESI registration has not done, you cannot go under SARFAESI. SARFAESI registration is must both for immovable assets, wherever you are putting through mortgage transaction, wherever you are getting a charge by means of hypothecation, particularly the movable item, that also eligible under SARFAESI. SARFAESI is eligible for both movable and immovable. If it is immovable under mortgage transaction, you got a charge under mortgage transaction, then SARFAESI registration is done, SARFAESI is eligible. If you are having book debts and stock, you have made hypothecation. For this hypothecation also, if you have done SARFAESI registration, you can go under SARFAESI. Vehicle. Vehicle is also movable. Vehicle also you take the hypothecation agreement. But for vehicle, you will not do SARFAESI registration. Instead of that, you will do Vahan portal registration. That is also equivalent to SARFAESI registration. You can go for SARFAESI action. Okay, if wherever the SARFAESI registration to be done, if SARFAESI registration is not done, those accounts we cannot proceed under SARFAESI. Then lien. Okay, lien. Some securities we mark lien and sanction loan. Those securities cannot be brought under SARFAESI. Similarly, pledge. Gold loan. You give some loan by getting a security called a pledge. Gold loan is a pledge. So those securities cannot be brought under SARFAESI. Similarly, any securities created in any aircraft defined under the Aircraft Act cannot be brought under SARFAESI. Similarly, creation of any interest in any vessel like ship, boats, etc., as defined in the Indian Merchant Shipping Act, cannot be brought under SARFAESI. Okay, sir. Now, which are all the accounts not eligible for SARFAESI? I have told, they will ask. So liability should be 1 lakh and above. That is less than 1 lakh not eligible. Even liability is 1 lakh and above, if 80% of the amount already paid, that is told amount demanded should be less than 20%. Then in that case also SARFAESI is not eligible. Agricultural land other than with a certain exemption, SARFAESI registration to be done and you are not done. Then lien, pledge, that is aircraft, as well as creation of security in any vessel. These are all the 5-6 cases where SARFAESI action cannot be proceeded. Questions will come. Okay, next. Then what are all the notices you will issue under the SARFAESI? So once you decide that the account is eligible for SARFAESI action, so there are various notices to be issued to the borrower, guarantor, and the mortgager. When the borrower and the mortgager will be a different person. When a third party property is taken, the mortgager will be a different person. The borrower also will be a different person. So whenever the mortgager and the borrower are different person, you have to issue the notice to the mortgager also, because the property belongs to him. Without the knowledge of the property owner, who is a third party, you cannot sell the property under SARFAESI. Okay, so demand notice. The first notice under SARFAESI is called the demand notice. So the demand notice to be issued under which section of the SARFAESI Act? As per the format, you have to issue section 13(2). These sections are very important. They will ask you either the section or they will give you the section and ask you what is that notice. So the demand notice. The first notice under SARFAESI action is called the demand notice. So it can be both for movable and immovable as per section 13(2) of the SARFAESI Act 2002. So the demand notice to be issued, the demand notice is for 60 days. That means after issuing the notice, you should not further proceed anything in that account. You have to wait and see whether the borrower is coming and asking you going to repay the loan or not. So demand notice is as per section 13(2). It is 60 days notice. To whom to be issued? I told you. How it is, what is the mode of issuing the demand notice? Next slide we will see. So possession notice. After 60 days is over, the borrower has not come forward to repay the loan, etc., etc., then you have to issue a notice called this possession notice. Possession notice is by as per section 13(4). Possession notice immovable section 13(4). So the possession notice is as per section 13(4) under different rules. Rule number 4 and rule number 8. Similarly, so possession notice you are issued. So first you issued the demand notice. You waited for 60 days. No reply for the borrower. Then you issue the possession notice. So paste the possession notice wherever it is required. Then take a photograph. Whatever we'll go and see in between in detail. Then you take possession of the property. Then after taking the possession of the property, you can issue a notice called sale notice. I will tell you. So between taking possession and issuing the demand notice, the time is 60 days. After you take possession, you have to publish in the newspaper. Within 7 days of taking possession, you have to publish the possession notice in the newspaper. So, after taking possession, within 7 days of taking possession, you have to publish the possession notice in the newspaper. Immediately after publishing in the newspaper, you can issue sale notice. So first demand notice, wait for 60 days. Borrower does not turn up. You issue possession notice. Take possession. Immediately after taking possession, publish the possession notice in the newspaper. Within how many days? 7 days. So the moment you publish in the newspaper, the next day itself, you can issue sale notice. What I want to say is, after taking possession, you need not wait for 30 days to issue sale notice. So after taking possession, within 7 days, you have to publish in the newspaper. After publishing in the newspaper, you can issue the sale notice. After issuing the sale notice, you should not go for sale till 30 days is over. You have to wait for 30 days. Okay, sir. So possession notice section I told you. Notice under section 13(2) means demand notice. Last time the question was asked, when the account becomes NPA, within how many days the demand notice as per section 13(2) to be issued by the authorized officer? Who is an authorized officer? As per SARFAESI Act, so nobody is allowed to issue any notice, including the panel advocate, should not issue any notice to the borrower under the SARFAESI Act, either demand notice or possession notice, whatever it is. Only scale 4 and above officials will be permitted to issue the notice. They are called authorized officers. So when you have to issue demand notice, as per Reserve Bank of India guideline, once the account becomes NPA, you can issue the demand notice. Within how many days, as per Canara Bank's guideline? Within 3 days. Within 3 days of the account becoming NPA, the authorized officer to issue demand notice. You need not get permission from any authority as per your loan recovery policy to issue the demand notice. Within how many days you have to issue? Within 3 days. Then, so after issuing the demand notice, you have to wait for 60 days to issue the possession notice, isn't it? So within the 60 days, you have to get permission for issue the possession notice. So you have to inform the authorities ROCO. I have issued the demand notice through the authorized officer. Now at 60, when the 60 days is over, if the borrower does not turn up, I am going to issue possession notice. Please give permission. That's all. You need not get permission for issuing demand notice under section 13(2). So within three days of the account becoming NPA, demand notice to be issued by the authorized officer. That question was asked last time. See, notice under section 13(2) to be issued by the authorized officer within 3 days of the account becoming NPA. No need for permission from higher authorities. Permission for issuing possession notice under section 13(4) from ROCO to be obtained. Okay, sir. Authorized officer issues 60 days demand notice to the borrower, guarantor, mortgagor to clear the dues within 60 days. If not, bank will exercise the following rights. Friends, SARFAESI action means let us not be under the impression that take possession of the property and sell. So if the unit will be running very well, he is a non-cooperative borrower, he is a willful defaulter. In that case, it is not necessary after taking possession, you have to dispose of the property or dispose of the factory. If you are able to manage, you appoint a manager and run the business. Run the business and collect the money on behalf of the borrower and adjust your liability. That is also possible. So the bank shall not, that is 60 days. If not, the bank shall exercise the rights, take possession, take over management, appoint any person to manage the asset, demand the amount due to the borrower from any person. Okay. Note, so how to send the demand notice? Section 13.2. Notice to be sent by hand delivery, registered acknowledgement due, speed post, fax, mail, courier. If sent by fax or email, confirmatory copy to be sent by registered post. In all the cases, you should have a, that is, acknowledgement by the borrower, guarantor or mortgager, and the signature of these people should tally with the loan papers which is lodged with you. If the signature does not tally, if the signature does not tally in the acknowledgement card, then what to do? Or if the borrower refuses to sign the acknowledgement card, refuses to accept your demand notice, so acknowledgement to be preserved. If the borrower, guarantor, mortgager does not acknowledge, publish it in 2 leading newspapers, out of which one should be in vernacular. Okay, so when they refuse, so what is the mode of issuing? Any mode. And if you are sending by fax or email, a registered post also should be sent acknowledgement due. Everywhere you should have an acknowledgement. So if the borrower refuses or the acknowledgement does not tally, then you have to publish in the 2 leading newspapers, out of which one should be the vernacular. Then in the case of a consortium or multiple banking, 2-3 banks have come together and sanctioned a loan against the same property. So what will happen? Let's assume in bank A, it has become NPA. In bank B and C, it is not become NPA. Now, what to do now? So whether you can issue demand notice because in our bank, it has become NPA. Yes. So if the account becomes NPA under consortium or multiple banking arrangement, the bank in which it become NPA can issue demand notice without the permission from either the lead bank or other member banks. So you go and ask, sir, they become NPA, I want to issue demand notice. Nobody bothers to give you any reply. You yourself can issue the demand notice. No need for permission from others. Consortium accounts and MBA. MBA means multiple banking arrangement. Member banks can independently issue demand notice. But member banks has to get permission before issuing the possession notice. As I told you, when it becomes NPA in our bank, within 3 days, we have to issue the demand notice. To issue possession notice, we have to get permission from ROCO. Similarly, consortium and member bank, if the account becomes NPA, the bank in which become NPA can issue the demand notice without the permission from other members. But before issuing the possession notice, permission of other members to be obtained. Then all the banks' permission obtained. Let's assume 10 banks are there. Whether 9 banks it is not NPA. In one bank is only NPA. Whether the bank in which become NPA has to get the permission from other 9 banks, consent from the 9 banks to issue the demand possession notice. Not necessary. To what extent it is sufficient? The mandatory requirement of 60% of the consensus, that is banks representing 60% of the amount outstanding, should agree at the time of possession note. That is, out of the total liability, you find out 60% of the liability is put together from which banks. You get permission from those banks and you can go for possession notice. Okay, so this question they are asking whether to get a permission before demand notice or before possession notice. Before demand notice, no need. Before possession notice, then what is the condition? Whether all banks to permit? No. 60% consensus from banks representing 60% of the amount outstanding. If we get the permission, it is sufficient under the consortium and multiple banking arrangement. The moment you issue a demand notice, the bank has to simultaneously file an application called caveat application in the DRT code. What is the caveat application? You will inform the concerned DRT, so and so I have issued a demand notice. He will come to you asking for stay of the demand notice, or he will come to you for some reason making us not to proceed. Please, without calling us and asking an explanation, don't give a stay order to the borrower. That is called the caveat application. Okay, caveat application to be filed immediately after you issue the demand notice to the borrower. So in between 60 days time the borrower is having. In between, the borrower or the mortgager or the guarantor will send you some letter in one pretext or other. He says, I will repay the loan within 1 month. Please do not proceed under SARFAESI. Or he will ask you, the rate of interest charged is not correct. Please give me a correct statement of account. Please tell me how you have calculated this interest. All these queries, you have to reply within 15 days. What will happen if you do not reply within 15 days? If you do not reply within 15 days, this fellow will go to that is your DRT. And the DRT, in spite of you have applied a caveat application, since you are not followed the timeline, DRT will give a stay order on your account. So the time norms to be followed correctly. Okay, complaints or anything during the 60 days of the demand notice to be replied within a period of 15 days. Okay, so 15 days is over, everything is over, 60 days is over. After 60 days, possession can be taken by the authorized officer. How you will take possession? There are two types of possession. One is symbolic possession, another is actual possession. Symbolic possession means inside the borrower has closed the factory or locked the house, so or somebody is living inside. So in that case, you cannot ask them forcefully, you should not evict. So you have to go along with the authorized officer, paste the possession notice and take a photograph. This possession notice to be published in the newspaper within 7 days of taking possession. So, but what is actual possession? If the borrower hands over the key to you, sir, take it. So this is actual possession. So if the borrower is not willing you hand over it, so you cannot forcefully take, you can take only symbolic. But still you want actual possession. So in that case, what you will do? You will approach the district magistrate. The district magistrate or chief metropolitan magistrate will help you for the actual possession. Within how many days he will help you? Within 30 days of you approaching him. Let us see the slide. See, issue possession notice to the borrower, guarantor and mortgager. Send the possession notice by registered AD. Affix on the property. So take either actual possession or symbolic possession. So surface, you can use the services of the SARFAESI agents also. That is you take that is possession of the property. So the moment you issue a possession notice, the borrower can approach the DRT court without depositing any amount within 45 days of the possession notice. So as per which they will ask you the question. So the borrower can approach the DRT court within how many days of issuing the possession notice? The borrower, the moment you issue the possession notice and taken the symbolic possession, he will approach the DRT court. No, sir, the bank has taken possession. Please stop it. So within how many days? Within 45 days of you issuing the possession notice, the borrower can approach the DRT court. How much? Let us assume Canara Bank has demanded 1 crore from the borrower. Any DD favoring Canara Bank, the borrower has to take and deposit in the court. No need for any amount deposit at the time of going to DRT. Within how many days he has to approach? Within 45 days. From which date? From the date of issuing the possession notice. As per which section? Section 17. These type of questions will come. Okay, so the DRT has to dispose of the case within 60 days. If the time is not sufficient, DRTs can take another 4 months also. So totally 2 months plus 4 months. Within 6 months, DRT has to dispose of the case. So DRT will dispose had you not applied for caveat application on their own. If you applied for caveat application, they will call you and give an explanation. Then only they will dispose of the case. Okay, sir. Next point. So let's assume DRT says Canara Bank is correct. You have to give 1 crore to Canara Bank. The borrower is not happy. If the borrower is not convinced with the order of the DRT, he can go to an appellant authority. So that authority is called Debt Recovery Appellant Tribunal. DRAT. So within how many days he has to go? Within 30 days of the DRT order. Let us assume DRT says Canara Bank is correct. You have to give 1 crore to Canara Bank. Now, if the borrower wants to go to DRAT, he has to go within 30 days of the order of the DRT by depositing at least 50% of the amount ordered by DRT. So 1 crore DRT has ordered, at least 50 lakhs deposit he has to make, as per which section of the SARFAESI Act? Section 18. Section 18. So they asked the section. Okay, within how many days? 30 days. 30 days from which date? The DRT order. So he is not satisfied. If he is not able to take 50%, he is not having money. So he goes and appeals to DRAT. Sir, I don't have 50%. So then DRAT will say, you bring minimum at least 25%. Without that 25%, DRAT will not consider his appeal at all. Okay, that is very important. Now, next question, next slide. So if the borrower, I told you about actual possession, no? If the borrower recedes actual possession, seek the assistance of the district magistrate or chief metropolitan magistrate who will get actual possession within 30 days. As per which section? Section 14. So section 13.2, section 13.4, section 17, section 18, section 14, all those sections are relevant to the SARFAESI. They are asking in the exam. So within how many days they have to take possession, give you the actual possession? Within 30 days. So after taking possession, either physical or symbolic, after the possession notice is issued, you have to publish the possession notice in 2 leading newspapers. One is vernacular within 7 days of taking possession. Within how many days? They will ask you within 7 days. So then you have to get the property valued by a person called SARFAESI approved valuer. All panel valuers are not SARFAESI approved valuers. SARFAESI approved valuers have certain higher qualification. They are also approved by Reserve Bank of India. So the value of the property under SARFAESI has to be approved by SARFAESI approved valuer. Then, so if the original value of the property, so at the time of sanctioning the loan, if the value of the property was 5 crores and above, as per your original valuation, in your original office note, if the value of the property was 5 crores and above, had you mentioned, now you have to take 2 valuation from 2 different SARFAESI approved valuer. They are asking question, not the value as on the date of going on SARFAESI action. The value of the property at the time of sanctioning the loan is 5 crores and above. You have to take 2 valuation. The higher of the amount you have to take into account for fixing the reserve price. Okay, in respect of immovable properties, in another case also, you have to take 2 valuation. Normally, when the original value of the property is 5 crores and above, you will take 2 valuation. Here, in respect of another case also, you will take 2 valuation when you will take. In respect of immovable properties of value more than 2 crores, that is last year it was 1 crore, sir. The last year circular it was 1 crore. In respect of immovable properties of value more than 2 crores at the time of sanction or renewal. So at the time of sanction or renewal, the value of the property is 2 crores and above. And the reduction is now, the value has reduced now more than 30%. Then also 2 valuations to be obtained. They will ask you the question, when you have to take 2 valuations under the SARFAESI action. If the value of the original value of the property is 5 crores and above, you have to take 2 valuation and analyze and take the higher valuation for fixing the reserve price. These are all the cases very, very important from vigilance angle. And second point is, even though the value of the property is not 5 crores and above, if it is only 2 crores and above at the time of sanction or last renewal, now when it becomes NPA, so the value has come down below 30%. The reduction is more than 30%. 1 crore, now the value of the property has become 65 lakhs. The last valuation, original valuation, it was 1 crore. That is, now it has become 65 lakhs. So when the reduction in the value is more than 30%, in that case also you have to take 2 valuation from 2 different SARFAESI approved valuers and find out why the property value has come down so much. That is when you are doing the valuation. Now, what is the problem in that account? Okay, this is the new guideline. Last year, if the value is 1 crore and above, you have to take 2 valuation. Now this year, if it is only 2 crores and above, and the reduction in the present value is more than 30%, in that case also 2 valuation to be taken. Okay, now we will go. And one more important point is, so once the account becomes NPA, you have to take one valuation. Please keep in mind. Once an account becomes NPA, you have to take one valuation. That valuation should be kept as a base for fixing the reserve price, etc. So before going to the SARFAESI action, you have to find out whether that value, before going, you have to find out what is the, that is a period of that valuation. If the valuation report is more than 1 year old, so what you are going to do now, immediately when the account becomes NPA, you have taken a valuation. Now you are going for a SARFAESI action. At the time of SARFAESI action, you have to find out whether based on the old valuation report only you can go, or whether you have to take a new valuation report. For that, the answer is, in all the cases, if the valuation which is obtained after the account has become NPA is more than 1 year old, fresh valuation to be obtained and reserve price to be fixed. Okay, so the valuation report is more than 1 year old. Which is more than 1 year old? After the account becoming NPA, you have taken a valuation. If the valuation report is more than 1 year old, then you have to take a fresh valuation report and you have to fix that is reserve price. Now, this is very important. This year, they have changed. So reserve price fixation, very, very important, friends, all the levels. So maybe 2 to 3 or 3 to 4, even for 4 to 5. How to fix the reserve price? There are two probabilities. This year, Madam Vijayalakshmi, CS Vijayalakshmi signed a circular. She has issued on the after the recovery policy has come. So the circular says two things. One is, there are in the valuation report, there are 2-3 value the SARFAESI approved valuer will give. The realizable value of the security, market value of the security, guideline rate. 3 things he will give. Realizable value of the security, then market value of the security, then guideline rate. And whatever other things he gives, don't worry. These 3 things you see in the valuation report. What is the guideline rate he has mentioned? What is the realizable value he has mentioned? What is the market value? See. So, whenever the realizable value is more than the guideline rate, if the realizable value mentioned in the valuation report is more than the guideline rate, how there is reserve price to be fixed. Okay, so the valuation report should not be more than 1 year old. That's very important. So if the loan is sanctioned by the branch, now you are going for SARFAESI action. So that is first time you are fixing the reserve price. RO head CAC will fix the reserve price on what is the minimum reserve price he has to fix, the realizable value given in the valuation report. Very, very important, sir. Last 2 years it is getting changed and questions are also coming. Please keep in mind. So the loan is sanctioned by the branch. So you are going to fix a reserve price. For which reserve price? The realizable value is more than the guideline value. So if the realizable value is more than the guideline value, for the loan sanctioned by the branch, RO head can fix the reserve price for the first time, and that reserve price should not be below the realizable value given in the valuation report. Okay, then. So suppose one sale you have gone, you are not successful. Every time subsequent reduction in the reserve price by appropriate authority should take place only though sale has become failure. First sale you have gone, you are not successful. Then the reserve price you want to reduce. Who will reduce the reserve price? So the reduction in the reserve price up to 10% of the realizable value for the branch sanction can be done by the RO head CAC again. First also RO head CAC. If the sale is not through, realizable reserve price can be reduced by 10% or maximum by 10% of the realizable value. That is, if the realizable value is 100 lakhs, the RO head can reduce it to 90 lakhs. The second reserve price he will fix. Second sales will take place. Now, the second sales is again a failure. Then the third sale will take place. Then who has to reduce the reserve price? Up to 20%, the reserve of the reduction from the realizable value. So every reduction is from the realizable value. So 10% reduction from the realizable value, 20% reduction from the realizable value. Here, the DGM, GM, COCAC will permit. So sale. So like that, whenever the next sale is a failure, so reduction in the reserve price from the realizable value will be done by the appropriate authority. So 26 to 35% like that. So this table you should know. So if it is a branch sanction, first time who has to fix the reserve price, subsequently reduction in the reserve price from the realizable value who can do after the sales have become fixed. The action is failure. I told you sale notice to be issued 30 days. So once you issue the sale notice, you have to wait for 30 days. At the end of the 30th day, you can proceed for going for the sale. Suppose one sale is failed. Now you want to go for a second sale. Whether for going for the second sale, this question they are asking. For going for the second sale, again sale notice to be issued. Possession notice you need not issue. So whether you have to issue a sale notice when one sale is failure, subsequent sales when you go, whether sale notice to be issued. Yes, sale notice to be issued again. Whether it is 30 days sale notice or less than 30 days. If the reserve price is reduced from the earlier sale price, or if the reserve price is increased from the earlier reserve price, the sale notice should be for 30 days. So whenever the reserve price is reduced or whenever there is a change in the reserve price between one sale to another sale, the sale notice for the second time also 30 days. If there is no change in the reserve price, then you need not go in for 30-day sale notice. If it's sufficient, if you go in for 15-day sale notice. Okay, sir. Then loans sanctioned by RO, whichever authority the RO has sanctioned the loan, these are all the people, the same people have the authority to fix the reserve price. And if it is loan sanctioned by any authority in the CO, these are all the people to fix and reduce the reserve price and HO. Okay, sir. So this is the method of fixing the reserve price when the realizable value is more than the guideline value. Last year, this was that. And some changes were brought out. And this year, they have brought one more thing. So somebody has represented to HO and they say sometimes the guidelines rate is more than the realizable value in the report given by the SARFAESI approved valuer. In that case, what we should do? See, if guidelines rate is more than the market value or realizable value, who has to fix the reserve price? In the earlier case, realizable value is more than the guideline value. Here, the realizable value is less than the guideline rate. Who has to fix the reserve price and what is the rate? First instance of fixing the reserve price, irrespective of the credit sanctioning authority, RO had to fix the reserve price at the guideline rate. Again, I repeat, whenever the guideline rate is more than the realizable value given in the valuation report, then who has to fix the reserve price? Irrespective of the sanctioning authority, the sanction may be done by HO also. The sanction would have be given by the MC of the board also. Irrespective of the credit sanctioning authority, whenever the guideline rate is more than the realizable value or the market value, RO at the CAC will fix the realizable reserve price at what rate he cannot go beyond the below the guideline rate. Okay, one sale has gone and it is not successful. Then we want to reduce the reserve price. Then who can reduce to what extent? Second instance, if action fails, irrespective of the credit sanctioning authority, RP means reserve price. If sanction fails, irrespective of the credit sanctioning authority, reserve price to be fixed by at market value by CBOA and CAC. First, whenever the guideline rate is more than the market value or realizable value, fix at the guideline value by the RO head, whomsoever is the sanctioning authority. The sale is a failure. Then the next sale price or the reserve price to be fixed by the circulated CBOC, not less than the market value of the property. So then also in all the cases I told you, no, whenever the reserve price to be reduced, action should have been completed, and in that action, bank should have failed. Okay, that's the third point. That is subsequent instance. So at guideline value, you are not able to sell. At realizable value or market value, you are not able to sell. Now, further, you want to reduce the reserve price. So, if action fails in the second instance also, irrespective of the credit sanctioning authority, reserve price to be fixed at realizable value or below the realizable value. First guideline rate, RO head. Second, market value, CO head, irrespective of the sanctioning authority. Third, so market value failure, guideline value failure. Then the following authorities will fix the reserve price either at the realizable value or less than the realizable value. They can fix at the realizable value, or at the first instance itself, they can fix less than the realizable value. CGM HOCSC to fix the reserve price at realizable value or reduction up to 35% of the realizable. Straight away, he will fix at the realizable value, or let's assume the realizable value is 100 lakhs. He will fix at 100, or if he want, he can fix at 65 lakhs or anything between 100 to 65. And if sale fails, then further you want to reduce. So so he has fixed up to 65 lakh sales failure. So further he cannot reduce. So it will go to EDCAC. So up to 36% or 40% of the realized value. So up to, that is 40% means up to 60 lakhs, EDCAC can fix 100 lakhs property realizable value. EDCAC sale is not through. CAC of the board 41% to 60%. So irrespective of the amount, the MC of the board will reduce more than 60% of the realizable value. So these questions will come. So when the realizable value is more than the market value or the guideline rate, how to fix the realized value? When the guideline rate is more than the realizable value or the market value, who has to fix the reserve price? Okay, these are all the questions expected. Then issue 30-day sale notice to all the concerned through registered post placed on the property, published in the two leading newspapers, everywhere it is like that. Sale to be effected after the completion of the 30 days only. As I told you, from the second sales onwards, if there is no change in the reserve price, then 15-day sale notice is sufficient. Otherwise, you have to give 30-day sale notice. Then, right to redeem the property by the mortgagor. Here I want to ask you a question. See, sale notice is issued, possession, everything is over, the sale is also success. So when the sale is success, what you have to do, the bidder, the successful bidder will give you the entire money. You have to go to the sub-registrar office, transfer the property on the name of the purchaser. Isn't it? Sale deed has to be created on the name of the purchaser. Now, at that time, the borrower or the mortgagor is coming running to you. Sir, please take the entire money. I have brought the entire money. Please take. Please do not transfer the property in that fellow's name, because this is my ancestral property. So when the borrower has the right to redeem the property from you, the borrower can demand and get back the property from you after he has paid all the dues till the publication of the sale notice only. Once you publish the sale notice, then it is your discretion whether to give the property back to the borrower or go for sale or give to the person who is a successful bidder. So it is your discretion. So the right of the borrower to redeem the property means to take back the property. He can come and demand from you till you issue the sale notice only. After you issue the sale notice, it is your discretion. He comes and cries, "Sir, give me back the property." You can give to him, or you can give to the other successful bidder. No problem. Okay. So, his right to redeem the property is available till the publication of the sale notice only. Then how you are going to sell the property? By inviting tenders, or holding public auction, or by obtaining quotation, or by private treaty. Private treaty means one-to-one. Okay, we can do. Now, so public action to be conducted. Yes, you failed in the public action. So public tender failed. So in that case, you can go for a private. Some people may not be willing to participate in the tender. So they say, personally, they will come to you and say, "Sir, I am prepared to take the property at the reserve price what you have fixed. So I don't want to participate in the tender." In that case, whether private treaty is possible? Yes, two conditions are there. If the property value or the reserve price are up to 100 lakhs, if the reserve price you have fixed is up to 100 lakhs, at least one public action or tender to be taken place. In that public action, if the bank has failed, then bank can enter into a private treaty and sell the property. And if the value of the property or reserve price is more than 100 lakhs, you should have gone for two, that is sales. And in both the sales, that is the bank has failed. In that case, you can go for private treaty. At least two attempts to be made as above before opting for the sale for private treaty if the property value is 100 lakhs and above. Okay, all public actions to be conducted online only. Online public action to be conducted for liability less than 4 lakhs. Action can be online or offline. Okay, sir. So leave it all those things. Then this is very important. So on the date of conclusion of this, at the time of applying for the tender, the tenderers or the bidders will submit their bid to you. So along with that, they have to keep a earnest money deposit. The EMD will be at least 10% of your reserve price. If you have fixed 100 lakhs as the reserve price, he has to give you a demand draft favoring Canara Bank 10 lakhs along with the tender. So you participate in the bid. So he becomes a successful fellow. So the sale is concluded today. On the date of conclusion of sale, already he has given you 10% of 100 lakhs. Now he has to give you another 15%. Totally 25% he has to give you on the date of successful bidding. So on the date of conclusion of sale, 25% of the reserve price has to be paid by the successful bidder, including the earnest money deposit. If he fails, the earnest money deposit will be forfeited and the property will be resold. This is as per which section? Rule number 9(3) of the SARFAESI rules. So already 10% he has failed. So remaining 15% he has to pay. When he has to pay? On the date of successful bid is over. On the day evening he has to pay the remaining 15%. If he is not going to pay, you will not give him back the 10 lakhs. So it will be forfeited. This is as per which rule of the SARFAESI Act. This is the rule. So everything is over. 25% he has given to you. Then balance amount when he has to give. These are all the questions they are asking. So within 15 days, the balance amount to be paid. So 25% already paid on the successful day. Then balance 25%, the balance amount 75%, he has to pay within 15 days. So if he is not able to pay 15 days, he will come and ask you time. The secured creditor. Who is the secured creditor? Canara Bank is the secured creditor. The secured creditor can give 3 months time to him. Under which rule? Rule number 9 for SARFAESI rule. So rule is important, dates are important, amounts are important. From there only questions will come from for SARFAESI. Okay, sale is confirmed only if the price offered is more than the reserve price. Okay, issue sale confirmation receipt on the entire sale process. This is a new thing which has come in this year recovery policy. So if the sale proceeds of 50 lakhs and above, let us assume Canara Bank has sold a property for 100 lakhs. So if the sale, how much sale proceeds you are going to get? 100 lakhs. If the sale proceeds of 50 lakhs and above, appropriate TDS has to be deducted and it has to be remitted to the government under the PAN number of the borrower, either by the successful bidder or by you. So 100 lakhs, you sold the property. He will come with 100 lakhs to you. So he will tell you, sir, 100 lakhs I am giving you. Whatever the appropriate TDS you have to deduct, balance only you have to take and credit to the loan account. The TDS you have to remit to the government under the borrower's PAN number. Or he may say, so the TDS is 1%, I will remit the TDS 1% to the government under the borrower's PAN, balance amount I will give you. So you have to take it and ensure that he is remitting the TDS to the government. Or you take the entire 100 lakhs, TDS amount you pay, balance you credit to the borrower's account. So for sale proceeds of 50 lakhs and above, the successful bidder to deduct the TDS at appropriate rate from the solved profits and remit to government with the PAN number of the borrower. Okay, so this is the new point in this year circular. So 223/23 is the HO circular. Okay, if the successful bidder fails to remit the balance amount within the stipulated time, within 15 days he has to pay, or within 3 months. If he is not paying the 25% he has already paid, so balance he is not able to pay, then the money 25% which he has already deposited will be forfeited and be credited to commission not taxable missing receipt. This has come in the new year. This year's policy, and the property will be resold as per rule number 9(5) of the SARFAESI rules. That is, sometimes what the borrower will, when the SARFAESI action is going on, the borrower will inform the SARFAESI. So whenever a loan is closed, so you have to get the SARFAESI cleared and give to the borrower. Or within the time limit, if you are not going for discharge of the SARFAESI, satisfaction of charge, the borrower himself will go to the SARFAESI and he will say, sir, I have cleared the loan, so please clear give me the satisfaction charge on the property. Please remove your charge. In that case, if the borrower approaches the court, either under SARFAESI action or any other action for clearing of the SARFAESI registration, SARFAESI will send a notice to the secured creditor. The borrower has approached me and he wants to clear the security, that is charge. So that one has to be replied by the bank within 14 days. If you do not reply within stating, no, that fellow is cheating, still the liability is there. If you are not replying within 14 days, then SARFAESI will remove the charge. There's a lot of problem for us. So it is possible that the borrower may intimate the SARFAESI that he has paid all the dues and request for satisfaction of charge. In such cases, SARFAESI will send a notice to the secured creditor to confirm. The same has to be replied within 14 days. Now let's see the question, sir. And then mostly our time will be coming. So SARFAESI. Okay. Now we have seen the PowerPoint presentation. In depth, we have seen the SARFAESI. Now by answering the question, you should get a lot of confidence now. Okay. So SARFAESI questions. So question number in my test paper, question number 71 onwards. So question number 71. As per the recovery policy given in HO Circular 223/23, branches shall arrange to issue demand notice under section 13(2) within 3 days. Question number 71, answer is A. Within 3 days, answer is A. Question number 72. Which of the following accounts are not eligible under SARFAESI? Security interest created in agricultural land with certain exemptions. Yes, correct. Time board accounts. Then liability rupees 1 lakh and below. Okay. SARFAESI not registered account. So which is not eligible under the that are A to D all. See, which of the following accounts are not eligible under SARFAESI? Security interest created in agricultural land with certain exemptions. Yes, they are not eligible. Liabilities rupees 1 lakh and below. Okay, not eligible. So SARFAESI not registered accounts not eligible. Whether time board accounts are not eligible? No. Time board accounts are eligible, but we won't make it time board because of the other reason I told you. As per the SARFAESI Act, time board accounts are eligible to go under SARFAESI. So question number 72, answer is B. Question number 73. The security interest created by a borrower under the provisions of the SARFAESI Act enables the bank ensuring repayment of the loan, for enforcing the security with court intervention, for enforcing the security without court intervention, for enforcing the security if the documents get time barred. So, for enforcing the security without the court intervention only, the SARFAESI Act has come into picture. So, for question number 73, answer is C. Question number 74. For initiating an action against the borrower, as per SARFAESI provision, the credit facility should have been overdue, irregular, regular, NPA. It should have been NPA. So, for SARFAESI action, if you want to proceed, the account should have been classified as NPA as per your RBI's IRACP norms. So, question number 74, answer is D. Question number 75. As per SARFAESI Act 2002, a bank or financial institution that lends money against a security is called, that is, secured creditor. Question number 75, answer is D. Question number 75, answer is D. Question number 76. Demand notice is issued by the secured creditor as per section dash of the SARFAESI Act, section 13(2). Question number 76, answer is section 13(2). Question number 77. Who is the authority to sign demand notice in the bank? Circle head, branch head, authorized officers. Question number 77. Answer is authorized officers. Question number 77. Answer is C. In our bank, the authorized officers are scale 4 and above. That is scale 4 and above. Question number 78. Our answer is B. Question number 79. What is the mode of issuing demand notice? Hand delivery against acknowledgement, registered post acknowledgement due, speed post, yes, courier, correct, fax or email, correct. So 1 to 5 any. 1 to 5 any more. However, if it is courier and fax, you should send it by registered post acknowledgement due also. So question number 79, answer is 1 to 4 any. Question number that is 80. A large company is sanctioned credit facilities under consortium and few member banks want to issue demand notice under SARFAESI Act. So few members want to issue demand notice. Okay, section 13(2). Leader bank should agree. No. 60% of banks by number should agree. No. 60% of the banks by amount should agree. No. Individual banks can issue if there is delay on the part of the lead bank. Yes, answer is D. So, for issuing demand notice, individual banks can issue. That is, there is no need to get permission from other member banks. Then, question number that is 81. If the borrower raises certain objection or send a letter to the bank seeking time to payment of the payment time for the demand notice, bank has to reply to him within how many days? Within 15 days or not that. None of these. Question number 81. Answer is D. The correct answer is within 15 days. Question number 82. If there is no response from the borrower, even after 60 days of issue of demand notice, bank to take possession of the securities is mentioned in which section of the SARFAESI Act? Section 13(4). Question number 82. Answer is section 13(4). Okay. Question number 82. Answer is section 13(4). Then, if the borrower or mortgager is not cooperative and resists in taking actual possession, the branch shall make the application to the Chief Metropolitan Magistrate or District Magistrate, as the case may be, for taking possession as per section. Which is section, sir? As per section 14. As per section 14 of the SARFAESI Act. Question number 83, 14. Or they may ask you, as per section number, what is section number 14 relevant in SARFAESI Act? Option: demand notice, possession notice, taking possession with the assistance of the Chief Metropolitan Magistrate. So, as per section 14, this can be implemented. Question number 83, answer is C. Question number 84. Under section 14 SARFAESI Act, Chief Metropolitan Magistrate or District Magistrate is bound to take possession of the secured assets and any documents relating to such assets to be handed over to the bank within a period of 30 days. Within a period of 30 days from the date of application. Question number 84, answer is A. Question number 85. As per the newly introduced section of the SARFAESI Act, that is as per 2016 amendment, DRTs are empowered to decide on the issues related to the tenancy lease, and no other courts or judicial forms has the jurisdiction to entertain any such litigation. You can note down the sections, 17(4)(a). Section 17 within brackets 4A. Section 17(4)(a). Question number 86. In respect of doubtful and loss assets with book liability exceeding ₹50 lakhs for taking possession of the securities, both movable as well as immovable, bank can utilize the services of resolution agents. See, under SARFAESI action, we have two types of agents. Recovery agents for SARFAESI, or we call them as SARFAESI agents, and there is another agents who are called resolution agents. If the liability is up to 50 lakhs, we can take the assistance of SARFAESI agents. If the liability is above 50 lakhs, we can use the assistance of resolution agents. The resolution agents are some agency. The SARFAESI agents may be agency, they may be individuals also. So, liability up to 50 lakhs, SARFAESI agents will be used. Liability of 50 lakhs and above, under SARFAESI, we can use the services of the resolution agent. So, that is question by the doubtful and loss asset with book liability also, and then the resolution agents will be given book liability of 50 lakhs and above for recovering doubtful and loss assets only. Resolution agent services will be utilizing liabilities 50 lakhs and above for doubtful and loss assets only. For other assets and less than 50 lakhs, we will use SARFAESI agents. Okay, sir. Resolution agents. Question number 86. Answer is C. 87. After taking possession, bank has to publish the possession notice in 2 leading newspapers within dash days of taking possession. Answer is B. So answer is B. 87. Answer is B. 88. Question number 88. Within how many days the borrower has to approach DRT code for the possession notice issued under SARFAESI, and how much amount he has to deposit as per section 17. So friends, you should know this section and days and amount. So within 45 days and depositing 50% of the amount. Question number 88, answer is C. Question number 88, answer is C. Question number 89. If the borrower is not satisfied with the order of the DRT code, he can approach DRAT within how many days and how much he has to deposit as per section 18 of the Act. Within 30 days by depositing 50% of the amount. Sorry. So this is here, sorry. Here, question number 88, within 45 days, he need not deposit any amount. Question number 88, answer is B, sir. Question number 88, answer is B. Question number 89, so he has to approach DRAT within 30 days by depositing 50% of the amount as per section 18. So question number 89, answer is D. Question number 89, answer is D. DRAT can reduce it to 25%. Okay. Then question number 90. As per the amendment to SARFAESI Act in 2016, borrower has the right to redeem the property till the publication of sale notice only. So question number 90, answer is B. 91. If the original value of the property is rupees dash crores and above, 2 valuations to be taken for processing under SARFAESI. 5 crores and above. Question number 91, answer is C. Question number 91, answer is C. Question number 92. Wherever the valuation which is obtained after the account becoming NPA is more than 1 year old. I told you, no, more than 1 year old. Question number 92, answer is C. Question number 92, answer is C. Question number 93. Authorized officer has to serve sale notice and wait for how many days before effecting the sale notice? He has to wait for 30 days. Sale notice, what is the section? Section 13(4). Okay. Then 30 days, sir. Question number 93, answer is 30 days. Question number 94. If guideline rate is more than the market value or realizable value, at the first instance, who has to fix the reserve price irrespective of the sanctioning authority? RO head CAC to fix at what rate? So what is this guideline value is more? No. If guideline value is more than the realizable value or market value, I told you, RO head CAC to fix at the guideline rate. The answer for the question is RO head CAC. At what rate he has to fix? At the GLR. Okay. Question number 95. Who has the authority to reduce the reserve price up to 41% to 60% of the realizable value wherever realizable value is more than the guideline rate and vice versa? You remember my slide number 1. So for question number 95, the answer is CAC of the board. Question number 95, the answer for both the cases, whether guideline value is more than the realizable value or realizable value is more than that is guideline value, 41 to 60% reduction is permitted for the CAC of the board. Okay, question number 95, answer is CAC of the board. If the authorized officer fails to conduct the sale of the immovable property by any of the methods, sale can be conducted again by the authorized officer by serving, affixing and publishing notice of sale not less than dash days to the borrower in the case of there is no change in the reserve price. However, if there is any material change affected, the sale notice that is change in the reserve price, etc., 30 days time to be given to the borrower. So, not less than, so that is, if the authorized officer fails to conduct the sale of the immovable property by any of the methods, sale can be conducted again by the authorized officer, affixing notice of not less than dash days to the borrower if there is no change. So if there is no change in the reserve price, 15 days sale notice is sufficient. Question number 96, answer is C. If it is changed, 30 days. 97. Sale of assets under SARFAESI can be confirmed when the buyer pays 25% of the amount, including the EMD of 10% on the date of action and balance 75% within 15 days. So if the balance 75%, if he is not able to pay within 15 days, the secured creditor can give 3 months time. Then question number 98. Sale will be confirmed only when the offered price is more than the reserve price. So you fix the reserve price, no? In the sale notice, you fix the reserve price. Let's assume 100 lakhs. The person who is giving the bid, he has to give at least 101 lakhs. It cannot, or that is, it cannot be more than that is less than the 100 lakhs reserve price you have fixed. Sale will be confirmed only when the offered price is more than the reserve price. Question number 98, answer is B. 99. The following agencies are empaneled by the bank for what purpose? Mrs. Recruitment Technologies, etc., etc. They are all recruited by the bank for agencies for e-action. Question number 99, answer is D. They are all the agencies kept by the bank for e-action. Last question. As per Ministry of Finance, all e-action sale notices are to be published in which portal? So you can note down the name of the portal. Anyway, I will post the answer. IBAPI. I for India, B for Bombay, A for Apple, P for pen, I for India. IBAPI portal. IBAPI portal. Why I am giving the portal name? No. Last time in the exam they asked. So in the case of customer is not happy with the reply given by the bank, under which portal in RBI they have to lodge for banking ombudsman. That rba.cms.portal is there. No, that question they ask. That is why I am giving the portal name, and this is available in your current year's recovery policy. Okay, friends, it is around 5:20. So I think I can close this session now. So some points are to be covered here. Let us see. Any other one evening we are getting it. I will try to cover it. Okay, good. That is, have a nice weekend. And anyway, tomorrow you have to go back. So if you are going to meet before the exam, it is good. Otherwise, all the very best from my end to all of you. Let me see all of you as that is in the next higher grade whenever we meet. Thank you very much, friends.
Sir, thank you, sir.
Okay. Then what news, sir?
No, no special, nothing special, sir.
Okay, okay. So all training is also over.
Training, everything is over.
Yes,
So,
sir. 1 to 2, 2 to 3 OBC, and this one is over.
mm,
This is also over. Now the next promotion passes only, we have to wait.
yes, sir.
Okay.
Thank you, sir.
We'll post the answer for these questions. You upload it.
Okay, sir. Okay, sir.